We are 2 after, so we're going to go ahead and start. Hello, everyone, and welcome to Continuity's first virtual end user conference. We have a wealth of information to share with you today. I want to thank each of you for making time to join us this morning. The virtual conference is being recorded, so this will be made available in the Support Center here probably in the next week or so. We will be opening each section with an overview of the products and how to optimize your investment. And we encourage all participants to submit questions via the chat feature regarding optimizing your products and join in taking polls. Compliance questions, those should still be submitted through the help feature on the Continuity platform or at help@continuity.net. Today, we also have 2 guest speakers who will be joining us during the Q&A, and they will be providing insight on how their organization utilized the continuity modules. We're going to go ahead and jump into the agenda just for a quick overview. Today, we will be going over recent enhancements and the roadmap, a regulatory discussion. We'll be taking a break around 10:05 Central Time, and we'll come back at 10:15 to start going through the product lines and again, optimizing your investment. Live Q&A, this is where our guest speakers will come in and we'll be addressing your questions that you've submitted through the chat feature. And then a live GRC technology walkthrough. Let me go ahead and we'll introduce everyone to the team. Oops. Sorry, folks. All right. So up at the top, we'll start off with Donna Cameron. She is the Senior Regulatory Compliance Expert. She has over 25 years of banking experience and joined Continuity in April of 2012. Most of you will recognize Donna from the quarterly reg briefings and reg facts. Next is Lori Peterson. Lori is also a senior regulatory compliance expert and has over 15 years of experience as an examiner and consultant. Lori joined Continuity in September of 2011. Folks may recognize Lori from the reg controls content. Justin Cole, Senior Regulatory Compliance Expert. Justin has over 14 years of regulatory compliance experience and joined Continuity in 2017. Again, most of you may recognize Justin from the Federal Compliance Chat feature on the platform. Sarah Boivet, I hope I pronounced that right, is the Senior Product Owner. Sarah has been with Continuity for over 9 years and a little over 1 year in product management, overseeing 2 of Mitratech's GRC products. Again, some of you may recognize Sarah. She was overseeing the support team. Next, so I'm Stephanie Fox. I am the manager of GRC Client Success. Prior to joining Continuity, I was the compliance officer for a $5 billion Dallas-based institution. I have over 15 years of experience in financial institutions and joined Continuity in 2020 after being a client since 2013. Sherry Genovese, she's an account manager. Again, over 30 years of experience in a financial institution and 25 of those years in audit. And she has been with Continuity for almost 10 years. Kim Snodgrass, she is an account manager, has over 6 years of experience in enterprise risk management and joined Continuity in 2021 after being a client and running their ERM program. And last but certainly not least is Kat Wynn, account manager. She has 8 years of experience in contractual compliance and then moved into a customer success role in the US, where she has been located since 2019. And she is our newest member to account management and joined in February of this year. All right. We are going to go ahead and jump into our first session over recent enhancements and the roadmap. With that, I will turn it over to you, Sarah.
Thanks, Stephanie. Really appreciate it. Um, so we have a few things to go over and wanted to give everyone here a view into what is happening in the product section of continuity. Um, First of all, just some terminology to get out of the way. We have on Continuity Platform numerous updates and changes you might see as you're working. Not all of these are in the product realm. So we have brand new capabilities that are added to the platform that did not exist before. We call these features. Then we have capabilities the platform has always had, and maybe it breaks, we fix it, we call that a bug. And then you'll see all of our regulatory informational items on the platform, the reg alerts, the reg controls, these are content. So the product roadmap in my domain touches on the features and to a small extent the bugs. So that's what we'll be looking at today. Want to give you all a view into the product cycle, what our direction is for this year and then beyond. And then we'll get into what everyone I'm sure is very curious to see, which is a snapshot into the product roadmap, so what we're working on currently. So as I'm sure you're aware, Continuity was acquired by Mitratech recently. And as such, we're in a new organization. So we have a new product process and we're working with a new team. There's myself, I started just in February last year, and we have 2 new developers, one who started in the fall, one who started just a couple months ago. So we're excited to work with them. And the process that we follow in Mitratech for all of the GRC products, all of the products as far as I know, is a collaborative and client-led one. So it's an annual process. We are continually collecting ideas and feedback from all of you, from our clients, through numerous routes. And then once a year, we'll take everything that we've gathered and we will formulate a long list. So here's everything that we might wish to build if we had infinite time and money. This is the fun part. We get to dig through and pick things out and really make a wish list. Then we go through, we'll prioritize these, some things might be requested by only one person, some things might be requested, only very long ago. Whereas others, maybe we see many, many requests for the same type of thing, or, someone is able to provide, here's a regulatory reason why I'm not in compliance with the features that are existing, and I would be if you had developed XYZ. So we'll use those type of factors and we'll prioritize the list down in order. Then we'll get the developers involved. We'll size out each item on the long list, so we'll see how complex and long this would be to build out. Then comes the hard part. So we don't have infinite time and resources. We have finite time and resources. We have 1 year. Each roadmap covers 1 year's time, and we have to set aside some capacity for internal support, for fixing bugs. We would love if there was never any bug, but we want to make sure that if something occurs, we can fix it right away. So we'll go through and we'll make a short list for, here's out of what's important, here's what we can get to in a year. Then the stakeholders and leadership will get final approval over this, so everyone's bought in. And then by the beginning of the next year, we will have our roadmap in hand. That's just the way it sounds. It's our marching orders for the year, so we'll know exactly what we'll be doing and we'll be ready to go. So that's the process. And looking forward, you can see how this process will carry us through 2023 and beyond. We will be continually collecting your feedback, and we'll be looking to make the continuity platform the best and most useful that it can be for you, the clients. So with that context, I'd like to show you some of the things that we have on this year's roadmap. So go on to the next slide and dig into some details. So out now, we have a few things that if you were to go on a platform right now, you'd be able to use. So we have add and disclosure reviews. I'm not going to go too deep into this. Justin will get into it on another slide. We also have a compliance and risk newsletter that we're making available, and Kat will go into that on the next slide. So I'm going to skip right over that too and just take a quick little sip. So one feature that we have out now is expanded change logs. So you may be used to, if you've been using the platform for a long time, certain areas such as the user profile or a smart folder have a change log where you can see for the last 18 months, here's a list of changes that were made. This can be helpful if you're researching, why is XYZ, in this setting now. You can look and see who changed it and when. That was not consistent on the platform. So there were some areas where you could look this up and some areas where you couldn't, which can lead to, taking a long time to answer a question if you have to go back and forth and figure it out internally or whatnot. So we decided to make this consistent, and we added change logs to many other areas where you might have settings that impact your organization that are accessible to multiple admins. You'll see it now in the file settings on a file. To do assignee and schedule changes are now available on a change log, as well as custom to do form fields. This is just a few of them. If you look in our support center in the product release notes, you can see the whole write-up. Related to that, we also wanted to make deletion confirmation messages consistent on the platform. And this might not sound too glamorous, but we had, if you delete something by accident, and then it's gone, that could be very disruptive to processes. We had, for a long time in one area, a very strong deletion confirmation message, which was in the distributed to-do. If you're looking at a to-do that was distributed to one or more people's dashboards and you delete it, there was a big pop-up. It gave you a ton of context. It was like, here's what's going to be affected. Here's the people who are going to be affected. Your reporting will not show this to do anymore, et cetera, et cetera. Please leave a comment if you're sure you want to do this. So it's very difficult to delete a distributed to do by accident. However, some areas did not have this level of confirmation, such as a control or even a smart folder. If you were to try to delete that, you would get a very quick pop-up that was like, are you sure? And if you deleted it, what happened was a lot of template to-dos and even a lot of distributed to-dos would be deleted, and you wouldn't get nearly the same level of view into the impact you might be having before they were gone. So we went through and we took a look at all the areas where you can delete something, sorted them by the impact it might have, such as, deleting a smart folder, very high impact. You could delete a lot of distributed to-dos potentially, and added strong deletion confirmation messages where the impact warranted it. So now it's consistent. You will be warned and asked to confirm. So it should be much harder to accidentally delete an item that is very impactful, and you can avoid costly errors that way. So that's what's out now. And again, if you go in our support center, you can read the product release notes for this and get tons more detail. Coming up next, we have a few exciting things. As I mentioned, we now have 2 devs on our team. So we're able to, speed up the process, the rate at which we can work on projects. So we have a few things coming out pretty soon. First one is the ad review project. And these are ad review to-dos with new upgraded logic. And I'll leave it at that. Lori Peterson is going to speak on this on the next slide. The next one that's coming out soon is a new access level for users. So this will be a view-only access level, which you can give to any user. This will let them sign in on the platform. They can see everything that an admin can see, and they will be prevented from making changes. This has been a long-standing request for, say you have an audit going on or an exam coming up, and you have a lot of compliance activity on the platform, and no great way to show this third party what's happening. You can describe it, you can download things, but if you wanted them to actually get in the platform and see, here's how everything's connected, here's what we have going out to these people at this time, there wasn't really a way. If you gave them a sign-in, then they were equal to a user, and then they could potentially change things or what have you. So we've added a new access level that will let someone you give this level to just sign in. They can view everything, they can pull reports, and they will be prevented from making any changes. So they don't actually have that administrator level. Coming a little farther down the line are some report builder enhancements. We collected the top requests that we've had over the years for the report builder page. Thinking things like new filters, new report types, solving some common confusion points on that page. For example, one enhancement that we're going to add is the ability to do a late to do report that is only open to dos. It does not include to dos that are finished, even if they were finished late. So making that area more useful for everyone. Looking a little farther out, we do have another reporting overhaul in mind. This will be, as opposed to just enhancing what's already there, this will be a new module, a new feature. And this is more in the early discovery phase, but we're aiming to let you get more back out of the platform. You put in a lot of data during your daily activities, and we're trying to let everyone get that level of information back out. We're thinking about, more customizable options, more options that you could present to your board without having to massage it a lot. So stay tuned. As I said, early days, but really excited to finally offer a more advanced reporting option. We'll also be redesigning the dashboard. Anyone who is a power user on the platform knows when you get a lot of to-dos, it can be very hard to find what you're looking for on your dashboard. Right now, the only way we have to find something is kind of just scrolling through the list. If you only have a few things, not hard. If you have a lot of work going on, it can get pretty overwhelming. So we're going to look at the dashboard, see what we can do to make it easier to find things, collapsing, filtering, that type of idea. And again, stay tuned. And then the last one, not very glamorous, but I'm excited about this. So we'll be doing upgrades on the back end for content management and platform performance, meaning it will be easier for us to provide the red controls and red alerts that you rely on. So we'll have more bandwidth in that territory. And also looking at improving page load time, report load time, that type of thing, so that it's just a smooth ride for everyone on the platform. So thanks for listening to all this. Again, stay tuned in the support center or on the platform. We'll give notifications as we release new items. Over to you, Justin.
Thank you, Sarah. Good morning, everybody, especially to some of our West Coast clients who may have just been waking up when our program started today. As Stephanie introduced me earlier, my name is Justin Cole. Due to my primary duties being more client-facing, my technical official title here with Continuity Mitratech is Senior Regulatory Compliance Advisor. I wanted to talk a little bit today about our product and service for advertising and disclosure reviews. So these are detailed and thorough advertising reviews and disclosure reviews performed by the ROC team. Generally, that would be yours truly, Justin Cole. Again, as noted earlier, I'm a certified regulatory compliance manager, as well as a certified anti-money laundering specialist. So within these reviews, what we mean here by advertising reviews is generally going to cover any of the regulations. Basically, you submit to us a print media, a website, something you want to put on a billboard in town, whatever the method of promotion may be. We're going to take a look at that advertisement and we're going to review it for mainly this compliance with the SAFE Act, Equal Housing, member FDIC, Truth in Lending Act, the Truth in Savings Act, and CAN spam if you're going to be delivering the advertisement via email. We're going to look at the CAN spam requirements as well. We're going to look at if it's not a deposit or a lending product, but rather a retail non-deposit investment product, such as insurances or annuities or the like. We're going to be reviewing it for the not language and all the things that are connected with that. As far as disclosure reviews, what this is going to consist of is basically we're going to cover any notice or form that is required by a federal compliance regulation, and we're going to give it a thorough review and make sure that all the content that needs to be in there is in there. There are several reasons why an institution may decide to utilize this service. including time savings, which is going to, as it eliminates strain on internal staff resources, expertise. Some of the ads that I've received are very complex. One of the most complex I ever had was an open-end HELOC ad that had a closed-end split-off feature, as well as it had an introductory rate for a certain time period. So sometimes the ads are very complex, and you might just want somebody who has that additional level of expertise to take a look at it. The level of expertise that we offer in our detailed feedback can minimize regulatory and reputation risk for your institution. We also can provide support when staff is missing, whether due to leave, such as in our client testimonial here, or when a permanent position may not have been filled yet, such as being in between compliance officers, or you may not just have a dedicated person that is looking at the advertising. So I encourage you to reach out to your account managers to learn more about this service that Continuity Mitratech can provide for your institution. And I'll go ahead and pass it along to Kat to talk about our monthly newsletter.
Morning all, thanks for that, Justin. So we've recently introduced a monthly newsletter. So this is going to be available for you guys in both PDF and PowerPoint presentation form. So it is designed to be completely board ready, but if there is any details that you want to take out and exclude, you can then do that in the PowerPoint and then send it on to your board members. It does include like the focus of the month, which is essentially what our Awesome Rock team are really focusing on, what's top of their mind for this month. So in the month of March, they were talking about the 1071 rule. The final alert will be issued once they've fully processed all of that information and have been able to kind of evaluate it. But we also cover off the regulatory updates, giving a summary of the alerts that have been issued each month. Within the document, all of the links are live, and when we send this deck out to you guys as well, the link within this slide itself will be live as well, so it'll take you directly to the newsletter. And each of the links within the newsletter will take you directly to that web page. April's newsletter was released yesterday, so that is live on the system for you guys to be able to view now. And if you haven't already kind of discussed the newsletter with your account manager, please feel free to reach out to me if it's me, or to Kim and Sherry, and we can go through the document in full with you guys. And with that, I will hand it over to Laurie.
Thanks a lot, Kat, and good morning, everyone. And Stephanie, I think we've got the ad review project up. There we go. So here is a workflow of the advertising review project that Sarah just talked about, and we're really excited to be able to bring this content to you soon. The content within the review to do is the same as the advertising review reg controls that you might already be using, but the functionality has been improved. You'll have a looping capability so that if an ad is not in compliance, it can go back to the creator and the reviewer as many times as you need to ensure full compliance before publication. So there's no more restarting a new to-do to have the ad reviewed again because it wasn't in compliance. And once this is available to all of our clients, one of your continuity administrators will enable the reg control and assign that first to-do on demand to anyone who should have the ability to submit an ad for review. And then that person would simply go onto their on-demand dashboard and complete that to-do. That's called Identify an Advertisement for Review. And that includes basic information about the ad, including the name and where it might be aired or published, the type of ad that it is, so then it will trigger that subsequent to-do. It can also track audience information if you do that, and they will upload that ad and then send that on to the next person. And those subsequent to-dos, the review, revise, and publish, those can all be scheduled as first to own so that one person within a group can complete that task. That's a great feature that we're very excited to be bringing to you. As with our current review to do, this one will walk the user through all those regulatory requirements that Justin was talking about, like FDIC or NCUA insurance, equal housing lender logo, those triggering terms in Reg Z or Reg DD, CAN-SPAM, and TCPA. As always, we use conditional logic throughout our to-dos so that only questions that are applicable to you will appear if they're particular to your situation. And once that regulatory review is complete, a to-do can be sent to the appropriate person, letting them know whether the advertisement is in compliance. So either the revise an advertisement would be sent back to them or publish the advertisement. And again, we have that looping feature. So if it's revise, it will go revise and then review and revise and review as many times as necessary until the person is told they can publish, and then it's complete. And again, as I said, we're really looking forward to bringing you this functionality very soon. And now I'll turn it over to Stephanie.
Thank you, everyone. So the next area we'll be jumping into is a regulatory discussion. The presenters will be Donna, and she will be covering hot topics. Lori will be covering reg controls and supporting material. And then Justin will be covering frequently asked questions. So we'll go ahead and turn this over to Donna to kick us off.
Thank you, Stephanie. Before I get started on all of these wonderful hot topics, I do want to give a shout out to Stephanie and her team, because an amazing amount of work went into putting this together, and we are really excited to be joining you today. Those of us that are long timers have wanted to do this for a long time, so we are really happy that you're joining us, and hope that you're getting a lot out of this session. So interestingly, I put together this list of hot topics a while back, and then when we started looking at the questions you were submitting with your registrations, they were following pretty much all of these topics. So these are the ones that you really did ask us to speak to today. I can't get into tons of detail on 1071, but I do want to give you an overview, give you the highlights of it. We are still working on the alert. We've got about 1,000 pages to go through. The CFPB announced it on March 30th. It has not yet made its way into the Federal Register, but we are working on it, hoping to get that alert out to you this month. So I wanted to give you sort of an idea of what you can be doing now, because this thing is massive. There's going to be a lot of work involved, a lot of burden, a lot of confusion, lots of pieces and complexity. So it's easy to kind of get all tangled up right now with it. And so what you really can and should be doing right now is, first of all, figuring out if it's going to apply to you. You need to be looking at numbers for 2022 and 2023 to help you figure out, does it apply to me? And then if it does, which tier you fall into, so you know what date you have to start collecting data. So to start with, you need to know how many covered loans you originated in 2022, and you will also need that information for 2023. And a covered loan is a business purpose loan to a borrower who has annual revenue, gross annual revenue in their most recent fiscal year of $5 million or less. So first of all, you need to know what your borrower's gross annual revenue was. And then once you know that, you need to see how many covered loan types you originated to those borrowers. And a covered loan includes closed-end loans, lines of credit, credit cards, which is a little bit new for us to have that included in a rule like this. You may have those on a different platform, so you do need to capture numbers for credit cards, and agricultural loans are covered. And then the things that you can back out of your numbers would be things like leases, insurance premium financing, letters of credit are not included in the numbers. And you also can back out any loans that would be HMDA reportable. So even if you're not a HMDA reporter, you can back out the loan if it would have been reportable. So that will mean if you want to take advantage of that exclusion, that you will need to understand what the HMDA rules are, so you know whether your loans would be reportable for HMDA. So of course, if you are originating hundreds and hundreds of covered loans, you might not want to go through that exercise of trying to figure out what you can back out of your number. But the threshold for coverage is 100 loans. So if you are at 102 in 2022, you might want to then see if you can kind of back out some of these things, so you're not going to be covered for a while. So the next thing then is, do you have this information readily available to you? Because not everybody captures gross annual revenue in a format where they can click a few buttons and get a nice report. And when we had our last quarterly webinar, I did ask that question as a poll, and about 25% of you said that you do not have that information readily available, and another 25% were not sure whether they did or not. So if you don't have that information at your fingertips, the CFPB understands that this may not be something you've been capturing, and so they will allow you to come up with a reasonable method, that's what the rule says, for estimating your numbers. And they give us an example of what they would consider to be reasonable. And they have said that if you start capturing the data on October 1st of this year, and you collect it for the fourth quarter, then you can multiply that number by 4 and estimate that that would be the number of covered loans you did in the year. So if you don't have the information handy, try to get systems in place by October 1st so that by year end, you can run numbers for the year. So you need to figure out what method you're going to use. And then once you have an idea of how many you've done, then you can figure out what your likely compliance date is going to be. The earliest that you would have to start collecting data is October 1st of 2024. And that is for the largest originators. So you would have to have originated at least 2,500 covered loans in both 2022 and 2023. And then the next threshold is 500, and then we hit the 100 threshold. So first, right now, just figure out, whether it applies to you and what tier you might be in. Our alert will be out shortly. We're going to be doing a lot of work to support you. We're going to be offering at least one webinar to help you with it. So stay tuned for all of that. And then a lot of you asked about CRA. That's another one that we've been waiting for. We expect it this year. We don't have it yet. This is going to be a major overhaul of CRA, interagency. So we don't know for sure when that one is going to drop. We're, of course, hoping that they wait a while because we're all busy with 1071. But one nice thing that was in the 1071 rule is that when the CRA rule does come out, portions of it are going to align with the 1071 rule. We had a lot of people were concerned that there was going to be some discrepancy between numbers that are being used in CRA versus 1071. That would introduce even more confusion and inconsistency. So they do say that once CRA is out, they will be aligning some of those numbers and those thresholds and definitions with the 1071 rule. So that should help us a little bit. FDIC signage, this is still in proposal stage. The comment period did end, but it will be significant if it's finalized as it was proposed. So I wanted to call your attention to it. This is going to introduce some new FDIC insurance signage that you will be needing to post, different types of methods that you use to deliver products. They are going to have specific signage for different methods. There also is going to be a new sign for you to post in areas where you offer products that are not insured. And of course, this all comes from the fact that there have been some folks out there who are advertising that they are FDIC insured when they're not. People have gotten burned because they thought they were dealing with an FDIC insured institution or the product they were getting was insured. And then they find out when the entity fails that it was not insured. So the FDIC is wanting to make some changes to how you will advertise your insurance status. Another one that a lot of people asked about is beneficial ownership. Again, this is another significant one when it finally comes out. But the important thing to remember right now is that nothing has been issued that impacts banks or credit unions directly. So there have been no changes to the Bank Secrecy Act yet. There have been no proposals to change the BSA yet. Those will be coming, but they have not hit yet. They are doing the preliminary work first. So they have issued their final rule that will apply to those entities that are going to be required to submit their beneficial ownership information to FinCEN for their new database. They've issued a lot of guidance, some FAQs, some videos, but those are all directed at the companies that are going to have to report their beneficial ownership information. There is nothing yet that you can do or should be doing, except that if you do get questions about this, because it's likely that your customers and members or even your vendors may hear about this, you can point them to the CFPB's resources that are available, because there is quite a bit out there that can help these companies to make sure that they are in compliance. Eventually, we will see a proposal to overhaul the BSA's beneficial ownership requirements, because of course, right now, you are still capturing this information when somebody comes in. That will no longer be the case. You will be going to the database. So they did put out some guidance on who will have access to the database, or a proposal, and how you will access it. That has not yet been finalized. So again, we all know it's coming. We're all waiting for it, but there's really nothing you can or need to be doing right this minute. Overdraft fees is another one we heard a lot about from you, that you wanted to hear about this. Again, nothing new as far as rules and regulations, but lots and lots of chatter from the agencies. We had last week, we had something from the FDIC and then something from the OCC on this. Not too long ago, we've had things from the CFPB. So very obvious that overdraft fees are top of mind for the examiners, so they need to be for you. And one of the biggest things to be aware of is that even if you do everything according to the letter of the law, so your disclosures are perfect, you accurately describe your settlement processes, you're very clear about when fees are going to be charged, even if you've done all of that correctly, you can still get hit with an UDAP citation, because the agencies feel that some of these fee processes are unfair and some of them are deceptive, and that they take advantage of consumers. And some of the things they mention are repeat representments. So an item hits and you send it back and you charge a fee, it hits again, you charge another fee. They're not loving that process. And so there are, some things that you need to be looking at. You really, if you haven't done it yet, you really should be analyzing your overdraft programs. Take a look at the fee income you're generating. If it seems like it's excessive, that could be a red flag. Take a look at your complaint logs. See if consumers are complaining. They really didn't understand, even though you disclosed it very carefully. Really be aware of what you're doing. Put your consumer eyes on, because it's easy for us to say, well, that's very clear because we know what we're saying. But consumers often don't get it. And the examiners are aware of that. And the focus is really on you treating people fairly. And UDAP is out there, the elephant in the room. So take a look at your overdraft practices. And then lastly, I just want to spend a couple minutes. The CFPB has been really active over the last year. I know you've been getting a lot of alerts on things the CFPB has issued. And most of what they've issued has had the UDAP focus. So again, UDAP is a really hard thing to get your hands on, but they are concerned about consumers being treated unfairly. They put out a policy statement on what they consider to be abusive. They did talk about overdraft fees again, return deposited items. They put out an issuance about discrimination in credit products. This one got a lot of pushback from the industry, where they said that they could cite something as unfair with a credit product, even if you didn't violate any regulations or laws. So that is a little scary. So you need to really be aware of what's going on in your shop. They've talked about improper use of FDIC insurance status. So not only the FDIC is looking at this, but the CFPB is looking at it with deceptive in mind. So a lot of issuances. We've probably had a dozen things from the CFPB over the last year, specifically related to UDAP. So again, it's not something that you can check a box easily and say, okay, there's no UDAP here. You really need to be constantly looking at your products and services. And then lastly, from the CFPB, we had a couple of proposed registries for non-banks. So those of you that are not banks, they are proposing to create a couple of new registries where you would have to submit information to the CFPB and they would make it public with your name. And specifically, they would want you submitting certain agency and court orders and also contracts if they have anything in them that could waive a consumer's legal protections. So the CFPB is all about consumer protection, and they've been really active lately about that. So before I close, I want to just remind you that we do Reg Facts briefings about weekly, and those are in our support center. We also do our quarterly Reg Advisor briefings. So make sure that you are signing up for those briefings, that you are reading the Reg Facts. They're high level. They're not the level of an alert, but definitely give you some information on what we're working on and what you need to know about. So on the next slide, I want to talk to you just for a second about our Mitratech user group in person in New Orleans in October. I did have the honor to attend last year's session in Nashville. It was a wonderful experience. I would recommend that you consider attending this year. You would have access to all of the Mitratech experts on all of the various products that are offered. And we at Continuity are just starting to think about our agenda. What kinds of things can we be offering? We're thinking possibly an expanded 1071 session. If CRA has hit, we might be able to offer you something on that. So it will really be helpful to us in developing what we want to cover if we know how many of you might be interested in attending. So we're going to put up a poll and ask you that question. Do you think you're interested in Interact this year? So that can just give us a beginning. You're not committing yourself to anything, but just giving us some idea of what our numbers might be looking like. So take a minute here and just give us a sense as to your thinking. And I will also just call your attention to the promo code that's on the screen. If you use that promo code, it's available only to those of you who are on this call today. There is a discount for the registration. Okay. And then lastly, for me, on the next slide, and coming up a little more quickly than Interact, we have the ABA's Risk and Compliance Conference next month. Lori, Justin, and I will be there in San Antonio. We hope you will stop by our booth, number 533, to see us. Also, if you are interested in scheduling some time with us one-on-one or with your account manager and a member of the ROC team, we would love to do that. This is our opportunity to get together with our clients. We always have some great conversations. I know we'll be showcasing some of our controls. So really hope that you are going and that you will look for us or set up some time ahead of time. So again, we've got a poll here to help us understand just what kind of numbers we might be seeing from our clients in San Antonio. So we'll leave that one up for a minute. All right, thank you for letting us know whether you are interested in Interact and whether we will see you in San Antonio. And with that, I will be talking with you in a few minutes about Reg Advisor, but right now I'm going to hand it over to Lori.
Great, thank you, Donna. I want to spend a few minutes talking about our reg controls and supporting materials that we'll develop to help you with these new and changing requirements that Donna just talked about. First, with regard to 1071, which is what is on everyone's mind, and having been personally immersed in this, it's quite the process. So from a reg controls perspective, we plan to develop a separate smart folder for that so that all of the related reg controls will be housed together. We'll also use the terms 1071 and small business lending as keywords so that you can easily find these reg controls when you're searching. We anticipate developing reg controls that are similar to those that are found in our HMDA smart folder, if you're familiar with that. As Donna was saying, the first thing to do is figure out if you're subject to this rule and when is your effective date. So that is our first step from a reg controls perspective, is to help you determine whether and when you'll be covered by this rule. So our reg control will walk you through and ask you to enter information about your covered originations, all those different types of loans that Donna was referencing. We'll go ahead and calculate, the platform will calculate whether your institution will be subject to the rule and then determine which effective date will be applicable to you. And if you find that you're not covered, the reg control will encourage you to annually review and determine your status so that if you become covered along the way, you know what steps you need to take. So we plan to release this as soon as possible so that you can gauge which effective date is applicable to you. We suspect that most of our clients will be subject to this. It's just really a matter of when. Next, we anticipate releasing a reg control to help you determine whether specific transactions are covered by the rule. And this reg control will ask you about the type of credit transaction and the applicant's revenue to determine whether the transaction is covered. And as I said, this is probably the second reg control that we'll develop with regard to 1071. And we plan to have this out later in 2023. So that if you'll be using that last quarter of activity to gauge what your overall activity for 2022 and 2023 is, then this will be available to you. Then closer to that first implementation date of October 1st, 2024, we'll release a reg control to walk you step by step through those data points so that you can determine whether any fields need to be changed. And we'll have a second step there so that any findings can go to your individual or group that's responsible for actually making changes to your small business lending loan application register. We'll also develop a series of monitoring reg controls, and those will be released on or after that 10/1 implementation date. And those will address your written procedures requirements, firewall requirements, LAR accuracy, and record keeping. And we haven't determined how many of those we will be developing, whether we put them together or separate. So we will determine that along the way. And then prior to that first submission deadline of January 1st, 2025, we will release a reminder reg control that will record when you submit that very first LAR. And similar to HMDA, we will be supplementing the reg controls with support center articles. I believe for HMDA, we have, 25 support center articles. So I suspect we would have about the same or more with regard to 1071. So we'll have an article about valid entries for the different data points. We'll have an article about reportable transactions so that you can easily look that up, and reporting ethnicity, race, and sex, and I suspect many more. So that is, of course, our biggest focus really for right now. When CRA rules are finalized, that will be our next focus, and we will develop and release new or revised reg controls to correspond with those effective dates. And we anticipate that our reg controls will be similar to what we currently have available. Right now, we have a couple of reg controls that help you determine whether your investments or loans are qualified as community development. And so we would be revising those or developing new reg controls to conform to any changes to the definition in community development. We also have a reg control currently that helps you determine how you'll be examined under CRA. And so we would be updating that to reflect the new asset thresholds and any other thresholds that they place in that rule. We also have a reg control that helps you monitor your CRA assessment areas. And this is a big focus in the new regulation, or what we think will come in the final rule will be the different ways that you develop your assessment areas. So our reg controls will help you determine how to determine your assessment area and how to monitor that and determine whether it needs to be changed. We also have reg controls that help you update your CRA public files. Right now, that's got a 4/1 deadline for an annual update, and we walk you through the content requirements. So any changes in those content requirements would be reflected in our new or revised reg controls. We also have several reg controls concerning the small business and small farm loan reporting requirements. And as Donna said, the CRA rule and 1071 are going to sync up at some point. So we will determine how we need to change or maybe even terminate some of our existing reg controls and just go with the new 1071 reg controls. But we'll be looking at that situation closely, determining what we need to do so that you can comply with all these various requirements. And as always, we love your feedback regarding our reg controls. So if you have, if you think that you'll be dealing with CRA or 1071 in a certain way and you want a reg control to help you with that, we would love that feedback so that we are best reflecting your needs. A couple other items that we have, as Donna talked about, the FDIC advertising requirements changing. And when those final rules are issued, we'll be changing our branch signage reg controls and our related articles, as well as the advertising reg controls, the ones in the ad review project, specifically making sure that they're revised and up to date and available on the effective date. And then finally, as Donna discussed, overdraft protection program fees are a hot topic with the regulators. And while there aren't any new requirements, the recent focus on authorized positive, settle negative, and the representment fees is causing us to review our related reg controls and determine if we need to add or change any questions or help text. Frequently, we go in and just make a few tweaks in there just so that you're seeing the most recent information from the regulators. And any changes on overdraft protection would be available for you in the next few weeks. And now I will turn it over to Justin to talk about FAQs.
Thank you, Lori. For those of you just joining the program or who may have joined since I last presented, again, my name is Justin Cole. I'm a Senior Regulatory Compliance Advisor here at Continuity Mitratech. I have about 14 years of experience in the federal regulatory compliance space, with about 6 years being an OCC examiner. And then after that, going into the private industry, and then along with being pretty much what we call in a consultant type of role here at Mitratech. So I wanted to talk a little bit today about our hot topics as far as frequently asked questions that I get. So to start into that, first of all, I run the compliance chat and ticketing system feature here at Continuity Mitratech. For the most part, I'm going to be the one that you're going to be interacting with. If I'm out, then other members of the ROC team will pick up for me. But generally on the day-to-day basis, I'm going to be the one answering all the questions related to our compliance chat and ticketing system feature. So we have a live chat feature for federal compliance questions that runs from 9 a.m. to 5 p.m. Eastern time. And then we also have a ticketing system that can be accessed through the live chat or the chat when nobody is actually live at that particular point in time, or also through our help desk feature or through various other mediums of communication. You accessed our ticketing system, which basically functions in a first in, first out manner. So I have a queue and a platform called Zendesks. And when questions come in, I basically answer them in the order that I received them. So these features, both the chat and the ticketing system, covers pretty much every federal compliance regulation that is under the authority of the prudential bank and credit union regulators. For instance, things like TRID, HMDA, flood insurance, appraisal regulations, ECOA, Truth in Savings Act, Reg E, BSA, AML. So basically all things deposit compliance and lending compliance related, as well as some things that may be more under what is considered a safety and soundness type purview, but we can take questions on some of that as well. You can check out some of the compliance, some of our client testimonials for this feature that you see here on screen and in the slide deck. So as mentioned earlier, I want to talk a bit about some frequently asked questions I get or issues that I see popping up continually when I perform my reviews, so to speak, or when I answer questions. So one of the big areas that I continue to see a lot of errors on is with TRID. And I'll get into more on some of the things that I'm seeing as far as when I get loan estimates and CDs submitted to me. But I first want to talk a little bit about a question that I've gotten recently here a few times related to second lien transactions. So a lot of times creditors can be confused on how to properly fill out the LE and the CD when you have second lien transactions, as specifically as it pertains to homeowners insurance and property taxes that are usually quote unquote associated with the first lien transaction. But basically, if the property secures the second lien transaction as well, then you have to disclose what is relevant for, as the regulation calls it, mortgage related obligations. And so as part of mortgage related obligations, such things do consist of the homeowner's insurance and the property taxes. So these do need to be actually disclosed in second lien transactions, just as if it was a first lien transaction. However, some of the main differences that you will see usually in the way that it's going to be disclosed is that often the second lien won't have any direct escrow associated with that particular transaction. So unlike with the first lien that generally will have an escrow associated with it, you would not disclose the part where it says in escrow. You would not check the yes box. And then also on page 4 of the CD, you would need to fill out the no escrow portion of the table chart rather than the escrow portion, rather than the escrow account portion when you're dealing with the second lien loans that don't actually have an escrow with them. So that's going to be something to particularly look out for with your second lien transactions. Again, it's important to make sure that you disclose similar things that you would with the first lien transaction, except that you're not going to have anything in the escrow. Also, namely, you're not going to have anything on section G of the LE because you're not generally escrowing. If you don't escrow for the second lien transaction specifically, and then you're generally not going to need anything in section F either, as these are generally specific to when the homeowner's insurance is paid with the closing at hand. In general, taking questions on TRID, sometimes I'll ask clients to send me in a loan estimate or a closing disclosure so I can take a look at it to help better answer their question. Part of me being an old OCC examiner, it's hard for me to take off my examiner hat. So when I get an LE or a CD, I'll generally look closely. I'll look not closely per se, but I'll give it a quick look in some of the key areas that I generally see institutions make mistakes on. And I'll see if our clients are filling those out correctly. And I do notice that there's still a lot of issues with filling out the closing disclosure, especially accurately and in full, and sometimes as well with the loan estimate. One thing I recently noticed was that in the purpose field, some of the clients were putting in the purpose in more of a layman's term, such as like cash out for student loan or whatever the case may be, cash out for personal expenses, cash out to buy a boat, instead of sticking with the four specific identifications that must be used in that label, namely being the purchase, the refinance, the construction, and the home equity. These are basically the only labels that you can use in that field. So it's not just a free type feature, so to speak. It's specific to these 4 things. Consistently, I see errors in the contact section on page 5 of the CD. As far as with the creditor, they have the MLO contact information. You're supposed to list an address and a phone number, email address, and a phone number. A lot of times institutions fail to do that. Sometimes and I see where an institution will be involved with another institution in terms of originating the loan, such as through like a wholesale origination or some kind of other way that they would get an application from another institution, and they're not filling out the mortgage broker section accurately. One question that's come up a few times for me is with regards to when the bank is acting as their own settlement agent. So there's a little bit of a difference in the compliance expert community on this. Some say that you should fill it out with the bank information. Some say that you shouldn't. My personal take, and that of many others, is that you basically would leave that section blank or omit it in cases where the creditor is the one who is quote unquote acting as a settlement agent. This is because the contact section lists the specific columns beginning with the creditor. And in this situation, my understanding is that the lender is the creditor, and that's it. So they can't both be a creditor and a settlement agent. They're just a creditor in that situation. This is my understanding. Next, I want to talk a little bit about Reg E, specifically with P2P transactions and error resolution. So this is a very, very frequent topic that I get questions on, just Reg E, error resolution in general, all types of scenarios with alleged unauthorized EFTs, a guy, you know, going to work out at the gym. He meets some nice looking young ladies at the gym. He invites them back to his home, and he has his debit card information or his PIN information posted on his refrigerator. And the lovely young ladies take his debit card information, take his debit card, and they have the PIN there readily available on the refrigerator, and they go and make transactions. This is actually a type of situation that would generally be considered an unauthorized EFT because stupidity and not protecting your PIN is not something that the regulation has any kind of sympathy for, so to speak. So, or it does have sympathy for it. It doesn't have any sympathy on the bank, who's still liable to cover the transaction. But so, like I said, all types of scenarios, but one thing that's especially been coming up again and again is related to P2P systems, such as Cash App, Zelle, etc. I get a lot of questions on errors with these systems. Previously, there was a lot of confusion in this area on whether or not it was the responsibility of the Zelle or the Cash App or whoever to be the one who's responsible for making the customer whole, so to speak, with Reg E error claims, or who was responsible for taking the claim and processing it, going through the resolution procedures. Many people were under the impression that this might be covered under the exemption in 12 CFR 1005.14 for third-party service providers. However, in December 13th, 2021, the CFPB issued a Reg E question and answer compliance aid. This series of questions and answers made it pretty clear that the service provider is generally understood to have an agreement with the bank. So therefore, when you have an agreement for the service, such as Zelle, you have an agreement between Zelle and the financial institution, then this eliminates the 1005.14 exception. And it does make it so that the financial institution is the one who is going to be dealing with these error resolution claims. So generally, any P2P transaction that is tied to a bank account at your institution will be subject to having to go through the Reg E error resolution process. However, there are some examples I want to speak about of transactions that are not actually Reg E errors. If funds are accidentally sent to the wrong phone number or the wrong email address through one of these systems, then that is actually, in other words, it's going to the wrong recipient. So you meant to send some money to your friend, David Smith, but it ended up going to Joe Jackson instead. That's something that's not an unauthorized EFT because the customer actually authorized the transaction, and it was basically their fault for submitting the wrong recipient information. And in those cases, the funds, unfortunately for the customer, the funds are pretty much lost in most cases, but fortunately for the bank, again, that's not something that's generally they're going to be responsible for. Another example of something that would not be an error is when the customer sends monies to a recipient to purchase a laptop or some type of other consumer good, and they willingly sent the money to the person. However, the person just failed to provide them that service or provide them that product. So they, sent somebody $2,500 on Zelle to buy a used car. And then they show up to the location where they were going to meet to take possession of the used car. And the seller doesn't show up. The alleged seller does not show up. So that's not a case where this is something that would be covered as an error, because again, the customer willingly made the transaction. Their credentials were not stolen in any kind of way. They just bought something, basically were scammed out of this money through a fake purchase. Next, I wanted to go into, as Lori mentioned and Donna mentioned as well earlier, there's been a lot of chatter from some of our clients in general related to the topic of overdrafts and NSF, especially our FDIC clients. I have heard from several FDIC clients that were required to provide restitution, to make all kinds of changes to their disclosures and to their processes to deal with some of the guidance that the FDIC has came out with in Financial Institution Letter 40-2022. There's similar things of this nature mentioned in the OCC UDAP booklet. As Donna mentioned earlier, two of the primary ways that they are going after banks and credit unions potentially is when it comes to under the UDAP umbrella, especially being deceptive or things that are considered unfair are generally going to be the ways that a regulator will have to attack you, quote unquote, if they want to cite you in some kind of way or make you provide some kind of restitution for your overdraft and NSF processes. This is because Reg E itself is very limited as far as what they actually require or what is actually discussed as being a direct Reg E violation. Not much of that really exists in the field of overdraft and NSF. Most of the things that you can get in trouble with are going to be found in the guidance, the various guidance that have been issued, as well as, again, under the broad umbrella of UDAP.
Justin,
Yes.
it's Stephanie. We are going to go to break. Is there any way we can touch back on the rest of this during the Q&A? And it looks like we also have some questions that were submitted.
Sure, I thought maybe some of the other people had gone a little quicker, so I thought I might have a little more time, but we can go ahead and move on to the break. And then if I have time again, I'll pick back up with the later on with the question and answer part. Thank you.
Most definitely. Thank you so much. So everyone, we are going to go on a quick break and be back here at 10:15 Central Time. And we will have Justin also pick back up on the remaining FAQs during our Q&A session. All right. Thank you so much, and we'll see you here in a moment. All right, so welcome back, everyone. We are going to jump into our next session here, which is optimizing your investments. So to start off, we are going to go over some best practice tips and tricks to help you maximize your investment. The products that we will be covering today is Reg Advisor Pro, as well as our State and Enforcement Action module, Reg Controls and Controls Builder, and Vendor Comply. For those clients that are using our Risk Advisor product, we are looking to hold a training session in 4Q, so please stay tuned and we will give you some more information on that. For the first section, like I mentioned, we will go over Reg Advisor Pro, Reg Advisor State, and Reg Advisor EA. And to kick us off, we are going to go over the coverage and types, and Donna will be presenting this. So Donna, I will turn it over to you.
Thank you. So Reg Advisor Pro is the product that covers the federal regulatory agencies. We have 4 different alert types. We have final rules, proposals, and then we have items that we call action alerts or info alerts. So of course, final rules are just like they sound like. Something has been finalized and there is action that you need to take. The same thing with an action alert. There's, we feel action that you should take, but it's not a final rule. So it may be a guidance document or a bulletin where we feel that there's enough there that it isn't enough just to send an info alert. We really feel like there's something you might want to do. And we do include those recommended action steps in both final and action alerts. Proposals are truly proposed changes. We give you the information on what's being proposed, the questions that are being asked by the agency, and the comment due date. And then for info alerts are those things that we feel you need to know about that are within our scope, but there really isn't anything you need to do about it. It's, you know, FYI, this is out there, just make sure you know about it. We do not include any recommended actions in our info alerts. And these, we often issue these when we get those requests for information from an agency. We've been seeing a lot of those recently where they're looking at different rules, not proposing anything yet, but asking you for some information. So Reg Advisor Pro covers the federal regulatory agencies and also a couple of others like OFAC and FinCEN. We do not cover things that are legal because that's outside of our expertise. We don't cover tax rules for the same reason. And we usually don't cover things that are strictly human resources related. As far as Reg Advisor State, that is an add-on product that you can sign up for. You can sign up for one state, you can sign up for all the states, however many you feel you need to know about. And that is, we get a feed, we look at it, we decide whether it's something that would be of interest to you, and we distribute it. We do not do any analysis, any recommended action steps. It's strictly a pass-through of an item we've received so that you have a heads up about it. We cover rules that have been signed by the governor or enacted, proposals. We decided a while back, based on your feedback, that we would not cover when a hearing is being held in a legislature, because turns out they hold a lot of hearings and sometimes these things never get passed. So that was a lot of noise you were getting. So we don't cover hearings, we don't cover when a bill has been introduced, and we don't cover enforcement actions at the state level. And then speaking of enforcement actions, we do have another product that we call Reg Advisor EA for enforcement action. And with that one, again, it's the federal regulatory agencies when they issue an action that is either directed at a financial services entity or one that we feel there's a chance that our clients could face in the future as something that's similar enough to what you do that we would want you to know that an agency took some action. So we do a summary of these, let you know if there was a penalty assessed, a prohibition order, and then what the gist of the finding was. So what did that entity do that got them in trouble? And this allows you to take a look at your processes and whether there's any chance you might be subject to something like this. And then you can let your management and board know why or why not you might face something similar. And recently we started including in our enforcement actions alerts on actions that are taken against individuals if that individual is at the executive level. So we don't cover tellers who have reached into their teller drawer or things like that. But if a board member or a CEO or, a chief compliance officer gets in trouble, we do want to let you know about those because that shows that the agencies really are looking at management as well as the entity itself. So that's a really quick high-level overview of our coverage and our types. And I am going to now hand it over to Kim.
Thanks, Donna. So I am going to be going over some tips and tricks. I'm going to be going over the Reg Advisor dashboard, Reg Advisor settings, Reg Advisor console, the available controls that come with Reg Advisor, and then policy and procedure library. You can go to the next slide. The first tip and trick, just wanting to let everyone know on the dashboard, I'm sure you're all well aware, the help icon and the question mark icon in the bottom right corner of your screens. First with the help icon, you can see to the right that screenshot that opens up. The search engine can take you, the how we can help lets you quickly search to the support center. And then you can also see top suggested articles from there. And then below is where you can request a chat and go into asking a federal compliance question or asking our support a question. The question mark icon, the second arrow, shows you the resources that are available. And you can see from that, you've got the Getting Started guide, the webinar, and publications. So the Getting Started guides are useful tips for new users. Webinars are where you can go to register for our quarterly reg briefings. And then publication is where you can see everything that will be on demand. So the reg fact videos, the quarterly briefings when they are available and on demand, and then our new monthly newsletter. So then you go to the next slide. The next kind of tip and trick, just navigating Reg Advisor settings. So just letting everyone know, just making sure everyone's aware where that's at. So you can see dashboard, solutions, oversight, and settings. When you click that drop-down box, Reg Advisor is the last one listed there. So when you click there, it opens the screenshot that is to the right. In this example, you can see there's federal, state, and enforcement actions listed. The tip and trick we're going to go over is the subscriber feature. So this is the FYI feature. So for assignees, you have to get the work done. Subscriber feature, we see clients using this feature in several different ways. It's a great information sharing tool without having actionable items. So maybe a compliance committee or a board committee would be in the subscriber so they can stay well informed but not have work assigned to them. This can be a group, department, or a role for information sharing purposes, and it is also available in our state and enforcement actions modules. Go to the next slide. So just going through, again, the first screenshot just showing you navigating where the console is. So under solutions, it's a second drop-down box, Reg Advisor, and you can see what opens up below is the Reg Advisor console. So you can filter by the name of the alert that you're looking for. Just keep in mind that sometimes you get the full name, the Bank Secrecy Act or BSA. So just be mindful when you're searching. Sometimes it's the full name, sometimes it's the acronym. Source is going to be where you can filter by federal, NACHA, or state. The type is where you can filter down to final, action, proposed, or info alert. And then the stage, as you can see on my screen, you can see the processing. So when that in the pipeline. Another example under stage is historical in NA. So those are also, you can see that historical will be before you were a client, and then not applicable is also going to be ones that you're not subscribed to quite yet. So I know that I'm getting some chats that everyone can hear me, so hopefully I'm back, but if not, I'm happy to repeat anything that I went through with the stages. So if I do have to repeat myself, please let me know.
Okay,
So
Kim,
yeah, go ahead. Where did I cut out?
You did freeze for just a moment when you were hitting on the stage piece. So if you could just go back and
Yeah,
review
absolutely.
that section.
Absolutely.
Thank
Thanks for letting me know.
you. You're welcome.
So in stage, you've got review, assign, and implement that are shown on the screen, but I really wanted to highlight on the processing, and that's when the ROC team begins their analysis. So that they haven't fully completed it yet to get onto your dashboard to be in that review assign. So if you're looking for a specific alert and wondering why it's not on your dashboard, you can come to the console to check to see that it's in the processing. And then there also are historical and not applicable types as well in the stage. So historical will be before you were a client, that you can take a look at things that were done prior, but also not applicable is good for if you're getting close to that 10 billion asset threshold. If you want to go in and look at notifications to prepare yourself, even though you're not subscribed to it today. Or another example, if you're an OCC bank and you're just interested in looking at an FDIC alert, you can do so as well. So then when you actually click into an alert, so in this example, the 2023 HMDA asset size exemption threshold, you'll see the far right, the last screenshot is what the alert actually looks like. So right below, you can see that this one difficulty stage is easy. And I'm sure most of us are anticipating that 1071 may be slightly harder than easy as a category, but this gives you an idea of just how much manpower it will take for you all to implement the alert. The first arrow points to the share. So share works very similar to subscriber. Just be mindful when you're sharing, it is to have to be a user that's on the platform. They won't receive the email notification, but it will go onto their dashboard, very similar as they would if they were a subscriber. So it's a great information sharing tool as well. To the left of it, PDF view, if there is a need to download it as a PDF and share it with someone outside the platform via email, you can do so as well. Then the second arrow looking at the available reg controls. So if you do have Reg Advisor, but also have reg controls, if there is an applicable control that is impacted from this alert, it'll let you know. In the example on the screen, this one's turned off. So you can click into the name, look at the control, determine if you'd like to turn it on. It also, if it was turned on, would let you know that you do have that on and it's active, just so you know of the reg control that is tied to the alert that has been issued. Then the last screenshot or arrow here is implement. So once you review and assign and it has been completed, this is where you can add additional to-dos. If it's unfinished, you're not able to add additional work at that time. Once it's in a finished status, then you can add additional work. If you can go to the next slide, Steph, thanks. So now we've got the available reg controls that come with Reg Advisor. So again, just navigating under solutions, it's the third one down, reg controls. There are 4 smart folders that are available when you purchase Reg Advisor. We've got continuity training webinars, document, learning, and Reg Advisor. So we go to the next one, just wanted to call out a couple controls that are in the Reg Advisor smart folder. Perfect. So these 2 controls are available to clients, monitor agency issuance and review and enforcement action. Both of these are if you're still manually reviewing state notifications and enforcement actions. This control allows you, if you decide to turn it on, to still automate the tracking and recommended actions to include it in your reporting to senior management and the board. So if you're not currently using our state or enforcement actions, you have the availability to turn these controls on to still have centralized reporting. But if you would like a more automated process to streamline, we do have those 2 modules available as well. So the last tip and trick to go over, go to the next slide, is our policy and procedures. So with any purchase of continuity product, you get our policy and procedure module. With Reg Advisor Pro in the settings, you can see drop-down box settings. The files is how you get there. You can upload files, documents here, procedures to kick off an automated workflow. If you guys are familiar using it, we have a 4-step workflow for our policy reviews. The first part is reviewing if there are any changes that need to be made to the policy. Step 2 is to update the policy. Step 3 would be to obtain your board of director approval, and then 4, any attestation that may be required. But if you are looking for a more robust platform that allows you to track changes, have multiple workflows for approval and employee attestation, please stay on the webinar for our session on Policy Hub. And now I will turn it over to you, Stephanie.
Great. Thank you so much, Kim. The next area we will be covering is Reg Controls and Controls Builder. I am going to turn this over to Lori, and she will again explain how these are developed and maintained, as well as the type of controls. Lori?
Great. Thank you, Stephanie. To provide you a little background, our reg controls are developed using federal laws, regulations, exam manuals, and guidance. And we use easy to understand language so you don't get bogged down in the legalese. We read the legalese and we try to interpret it for you so it makes a little more sense because it can get a little tricky. Whenever regulatory changes or advisory opinions, those CFPB circulars, and even supervisory insights are issued, we review all of those and determine whether any new reg controls should be developed or whether we need to make some revisions to our existing ones. We don't make our revisions on a specific schedule. We make them as they're needed so that you are always working with the most up-to-date content. Stephanie, if you'll go to the next slide, we've got a couple different reg controls. And so I wanted to go over a few of those types. We've attempted to name these uniformly so it's easier for you to determine which would be appropriate to a specific situation. So here we've got a determine status reg control, and these help you determine and document whether specific requirements are applicable based on your input. This one, determine HMDA reporting and partial exemption status, will ask you for your asset size, your location, number of loans originated, and more to determine whether you are covered by HMDA and you're required to report. And then if you are a reporter, it will ask you additional questions to determine whether you can take advantage of the partial exemptions. And your determined reg controls would likely be used by your first or second lines of defense. But again, this will depend on your institution's procedures. And then on our next slide, we have a review reg control. And these will walk you through the regulatory requirements and let you know whether a specific disclosure or a file or an advertisement is in compliance with all of those requirements. We have simple answer choices of yes, in compliance, no, not in compliance. So when you get to the end, you know whether it's in compliance or not. This particular one walks you step by step through each data point that you're reporting for a HMDA reportable application. And when you get to the end, you know whether you need to make any changes to your loan application register. The review reg controls are intended as QA, QC. They could be used by your first, second, or third lines of defense, again, depending on your institution's procedures. And then on our next slide, we've got an example of our monitor reg controls. These are intended to summarize the findings from the review reg control and to also monitor the institution's overall compliance with your policies and procedures, record keeping, and other general regulatory requirements. This one, Monitor Overdraft Protection Program. This is one of our hot topics today. In this case, the requirements and guidance for banks and credit unions are not the same. So we have two different reg controls there. Both of them walk you step by step through regulatory requirements, expectations, and best practices. And as I stated earlier, we're reviewing these or all of our overdraft reg controls to determine if we need to make any revisions to the bank versions because of the recent guidance from the FDIC and the OCC. And as I said, typically, sometimes we just make some tweaks to some of our help text just so that you're working with the most recent information. The monitor reg controls might be used by your second or third lines of defense, again, depending on your institution's procedures. And then on our next slide, we've got a record reg control. These serve as reminders to comply with specific requirements and then would record your actions. This one walks you step by step through the regulatory content requirements so that as you're updating your file, you know whether the updates are complying with the requirements. In this case, the existing regulation requires an update by April 1st, so we have established that as our due date. And these record reg controls might be used by your first line of defense, but again, that will depend on your institution's procedures. We also have reg controls that don't have regulatory content. We really just develop them to help clients automate their processes. So they help you distribute meeting agendas or meeting minutes and training materials and more. And that is just a brief overview of our reg controls. And Sherry Lynn is going to give you a lot more information about how to optimize your use of those, and then also our controls builder product. So thank you.
Thanks, Lori, and thanks, Stephanie, for hosting here. So I wanted to talk about the reg control tips and tricks. What I've shown here is just some of the questions that might be used to determine whether or not you, what some of the considerations that you want when you're approaching the controls. So one of the things I failed to do is introduce myself. So I'm here. I was one of the account managers at Continuity, been here for quite some time. And I will admit, I approach everything with an auditor hat, as was said before, once an examiner or an auditor, it's kind of hard not to approach things that way. But this works as an advantage for my clients. So what you're seeing on the slide are typical of what might be asked when starting to use reg controls. There are several subjective approaches to take. So it's not a one size fits all. We want to approach it with your goals in mind. So some of the different approaches to reg controls are to optimize your CMS, but where do you start? There are over 400 controls to address. So some of the considerations that are not on this screen are, what's the culture at my organization? Am I trying to shift this culture? Is compliance perceived to be in the compliance department only, or do I have champions in other areas? Do I have executive management support? And I'm sure all of you might be shaking heads on the other side here, but these are some of the things that help the account manager create a plan with you. So we want to partner with you to understand what are the challenges that you're facing. So how are you managing compliance now, but what do you envision it to be? So we want to, again, help you with that plan. Will this be used just in compliance, or am I going to use it across my whole organization? Am I going to use it as a phased in approach? So we are also asked, what do I turn on first? That's a question we get a lot. You know, what is the requirement? Well, the requirement can vary from organization to organization. You may have results of exam or audit findings. You may have been told to beef up your complaint program to have it formalized. You may have been told to beef up your monitoring program. Monitoring and testing is not the same thing. So this can also be expanded or phased in. Monitoring might look at, do I have the components in place? The testing part of that is, can I validate that testing? And that testing might be performed in different areas, but we have the tools to assist even a novice compliance person to walk through that testing. Another approach might be, what's on my table right now? What do I have on my schedule that I'm committed to completing? Considerations about how you'll present the platform to the rest of the organization. So you'll want to set the tone and the expectation from the very beginning. Your account manager can assist in facilitating introduction to others in your organization. So I want you to keep that as a tool. We are here to support you and to get the usage that you're aiming to install. Another way of approaching the controls is to look at specific regulatory areas. This is not all, again, for the same for each customer. So I might have an issue in Reg E errors. I might have an issue with complaints and so on. You could also approach by who is the similar assignee. So as an example for that, we have Reg A errors, consumer report disputes, complaints, reporting potential senior abuse, and more. Now, these would have the same assignees. So I might approach using those controls all in one bucket for training, because although they touch different regulatory areas, they are handled or input by the same individuals. You also want to consider how you could use the first to own feature. I know Lori talked about it earlier. So it's a way of setting a control with a timing that it distributes to many, but is only performed by one individual. Some of the terms you might be familiar with are, cross-training, rotating job functions, or just having someone out unexpectedly. How do I keep the compliance machine running, regardless of whether there is someone as an admin or compliance officer at the helm? So those are some of the planning techniques that you'll want to consider. Next slide, please. Thank you, Steph. So what you're seeing on the screen here is a list of all the reg controls, including the smart folder they reside in. The list includes the objective of the control, how often it may be used, and whom it might be assigned to by functional role. Timing and ownership is determined by administrators of your instance of the CMS. There are over 400 controls, with over 80 of them being monitoring controls. I assure you, you won't use all of the controls. Some are duplicative intentionally to support different operational structures. So an example of that is our complaint process. This could be handled by one individual who documents, research, and resolves that complaint. So we would call it a one-step control. But another institution might have those complaints coming in from the first line of defense, and they want to manage them in the back office. And so there is a step to determine who's going to research and resolve that, assign that out, and then it is assigned to someone else to research and resolve. That's what we call a three-step process. You would generally not use both. So those are some of the determinations that you'll have to make as we move through the control environment. Another example of variables, not there yet, thanks though, Steph, in deciding which controls to use, we include BSA and training reminder controls for those that don't have separate softwares. So if you do have those softwares, your account manager will assist you in determining which controls you will and will not use. Whether you need to create a monitoring plan or perform a gap analysis of your current plan, you can use our list of available reg controls to document your efforts. Some of the questions to consider that you see I started to outline on the left-hand side are, do we monitor? Do we want to monitor? If so, how often? What's the risk? Not the same at each institution. For example, Reg CC holds at one institution may be a very low risk. They don't have any issues in that area. So I might push my testing out to quarterly, or I might have it done by the first line of defense. So I probably would just do a sample. At another institution, there's been a citation by a regulator. So I want to have everything tested, and I'm going to have them do it 100% of these, the volume of Reg CC holds at the first line of defense. So this is why there's not a one-size-fits-all approach. So considerations are, what model do we use? And I want to say again, what model do we envision? I see here a lot of my clients want first line of defense controls, but they may not have that. One of the advantages of our platform is we really can give you that tool that you need to implement first line of defense. Another consideration is, will audit be using controls too? Will audit be leveraging testing performed by others? I, in fact, started as an auditor here at Continuity and learned how to use the controls to leverage my audit. Best practice is to document an outline of your plan for regulators, auditors, and examiners. So I also think this is really useful in coordinating with audit. I've heard in my past, having audit and compliance in testing at the same time can cause a little agita with some people. So if you coordinate with audit, this just outlining a schedule helps you determine, so you're not in at the same time, but also can audit leverage some of the work of compliance or a first line of defense. So this illustration, I've started to create different tabs to document what I'll use and what I'll not use, whether where monitoring or testing is done by other business units or software. And my next step would be start color coding. Usually I stick with some standard colors, but you have your choices. I use green, yellow, and red. Red for what I won't use, green when I need right away, and yellow for my second phase or walkthrough. Your account manager can work with you to optimize our solution by assisting you with mapping or creating your plan. Next slide, Steph. Thank you. There we go. So this is one of my favorite sayings. I think it's from my career history, is the proper planning prevents poor performance. And I can tell you, documenting things or planning ahead of time was not always my forte, but I certainly have seen the light and the advantages of that. And for any of you trivia buffs out there, I had to look up, where did this come from? So this saying, it comes from James Baker, the former Secretary of the State, who served under George W. Bush. Back to you, Steph.
Great. Much, Sherry. The next section will be covering Controls Builder. And with that being said, I am going to let Sherry have a drink of water, and then we will turn it back over to her to, again, go through our Controls Builder module. Sherry.
Thanks, Steph. So for any of you that know me, who I am your account manager, you probably know I can usually talk for a full hour, no problem. But today is not that focus. So what I wanted to talk about, what you see on your screen is what Controls Builder is. If you ever wanted to customize a continuity control, Controls Builder is what you use. Some of the questions, do I really need this? I would ask you, do you maintain and reconcile spreadsheets? Are you sending reminders by email? Is it difficult to get unified responses? And what I mean by that is, getting responses is one piece, but the other piece is just, can I get the same response? So if I can create drop-down lists versus free-form language or input, I have much more effective data that I can then analyze later on. Sometimes are your processes just confusing to end users? So I'm sure you spend much more time than you'd like to on the administrative aspect of compliance, oversight, scheduling, getting responses, verifying training, and so on. So I really want you to consider using the right controls to streamline your processes. Similar to our library controls, Controls Builder lets you take your processes out of manual spreadsheets and forms by creating workflows that streamline tasks. Continuity takes on scheduling and sending reminders to users and managers. Next slide, please. So I know this looks like chaos, and that's intentional. This is an actual form from a state banking department for a process that is expected to be used when an on-site ATM is suspected after account opening. So I need to send one of my branch personnel out to the location. And this is my expectation for them to fill out this form, which is not really clear. We determined that 2 different paths of questions existed. Documentation needed to be collected. Website license verifications. I had to go out to a public website to verify licensure in this particular state who required it, and much more. So, and there's several questions that are embedded in here that only need to be seen if they're pertinent. So I can assume that you agree that this is a bit confusing. Next slide, please. There we go. So
Sorry, Sherry.
that's okay. That's all right. I can be flexible. So I wanted to highlight here what the control looks like in the background. So we use simplistic tools and help you understand what those, how to use those tools to create, say, a calendar. If I wanted a from date and a to date, that's 2 calendars. And this is something your account manager can help guide you, but we also have a lot of training and support videos and so on. Your controls are created by selecting from defined steps like calendars, drop-down lists, text input to create unique workflows. You can make fields required so they aren't skipped. And I know this is something we can't do in a spreadsheet, right? So that is one of the challenges. We can hide and show steps based on your questions. In the example of this ATM investigation, we start with, do they own the ATM or do they not own the ATM? Because there's a whole different set of questions depending on that answer. You can add help text to guide the person through what you expect, how you expect them to answer. And every control step funnels to reporting that can be used to review the data. So that could help me determine, are these reported from the same branch all the time? Are we not capturing the correct data at account opening? So when I see these come through, I did create a previous control to this to have users data mine their own database to determine, looking for certain transaction codes. Y'all might have some software that already does that, but if you don't, there are certain transactions that are indicative of a private ATM. Next slide, please. So this is a snapshot of just a piece of the control. But these are the 2 different paths that I can take. I see one set of questions if the ATM is not owned by a customer, and another set of questions if it is owned, guiding everyone along the way as to what questions they need to answer. So instead of guessing, which is with that form, this makes it a real clear path. And I want you to note the required field, how I made that required. If I require an upload, I'm going to make that a required field. You can build controls from the ground up or copy continuity controls, keeping in mind regulatory content and maintenance. We have several support articles and training videos to assist you with how to build controls. It can be a very simple or more complex control. And I have a couple of examples here, which are very short, not visually, just to talk about the mindset or the workflow or the problem I was trying to solve with a client. So I had one client who wanted a simple form to document outside training and the associated policy. Some of the problems we ran into is that people would call policies different names. I could use mortgage or use MTG as it was a free form field. So they made a decision to take from their policy library all of the policies, put them in quick alphabetical order so that it became a drop-down list instead of a free-form field. So all the naming conventions were now the same. So a user could simply pick from the drop-down list, and we also distributed this control on a monthly basis. The ask was to have people complete a spreadsheet on a monthly basis, but I'm sure you can guess how that went. So what happened is now we have a reminder and a time schedule to make sure that that gets done. I had another creative BSA officer who wanted to introduce herself to each employee. And this was during COVID, so that became a little bit of a challenge. So she created a video and she included this with her new hire training. So definitely brilliant. Another popular build is customizing your complaint control. You can use our library control here. There's no regulatory content, but you can use this as the basis instead of creating your complaint control from scratch. So your account manager can assist you in learning how to build controls. If you identify a workflow that needs to be created, that's even better. Working with that data and helping you understand the workflow that needs to happen and how fields might show and hide, and planning that out helps you to understand how to build that control. So hopefully I've sparked your creative thinking about the advantages to creating unique controls of your own. Back to you, Stephanie.
Great. Thank you so much, Sherry. We are at time for the product optimization, but Sherry, if you want to go through vendor comply, do you think 5 minutes will be sufficient, and then we can spend 30 minutes in Q&A?
I only need 3 minutes.
Perfect. All right, well then let's jump into vendor comply.
Okay, so vendor comply is a simple, effective way to manage your vendors within your CMS. It can be used for complex or simplistic vendor reviews. It includes evaluations and considerations for new vendors also, which are potential vendors. Each aspect of a vendor relationship can automatically be assigned to the vendor owner or multiple individuals based on your structure. So an example I would give of that is a vendor relationship that has a SOC report that's reviewed by IT on a 2-year cycle, insurance that's reviewed on an annual basis by the vendor management department, and then a contract, which is maybe on a 3-year cycle. Maybe that needs legal review. So with each vendor, I can separate those tasks by timing and by owner, not changing the vendor owner, but just giving ownership to different aspects of that relationship. Steps are integrated with the rest of your CMS platform, and each step is assigned to a role. It's similar to Reg Advisor Pro and Reg Controls. This ensures that when someone leaves the institution, you're prompted to reassign the work. Next slide, please. So this is an example of just the beginning questions for a contract review, which is either a new contract for a new vendor or an existing contract, a renewal time. The consideration, the questions are under each tab. Consider legal approval, controls in place, business continuity plans, termination clauses, and regulatory information. Next slide, please. There are also risk-based reports for each vendor and collectively for executive management. Vendor risk considers, I'll try to read them all for you. I don't know if they're big enough to see. Data sensitivity, transactional volume, financials, turnover at the vendor, again, business continuity plans, IT, subcontractors. That's become very important lately as people change subcontractors. And I did read our control to make sure we considered that. Physical location, communication, reliability, scalability, and security. So that's just a snapshot of vendor comply. Your account manager can definitely help you if you'd like to see this more in detail. But for those that are looking for a more robust vendor solution, we will be reviewing another Mitratech solution, Vendor Insight, later in our presentation. So thanks you, Steph. That was the end. I did it in under the 5 minutes.
You are perfect. Thank you,
Okay.
Sherry.
You are welcome.
All right. We are going into our next session, which is our live Q&A with our product experts. And as I had mentioned earlier, we do have two guest speakers. And so first, I would like to introduce everyone to Kara Quick. Kara is the VP Compliance BSA and CRA Officer. So I'm similar to probably most of you on the line, wearing multiple hats at your institution. First Hope Bank is where Kara is located. Well, is the institution she works for. She is located in New Jersey, and their assets are around 700 million. So Kara, if you are on the line, we'll go ahead and open up some of these questions and just have some open dialogue here.
Good morning, I am.
Perfect. So Kara, will you just let everyone on the call know what products it is that you are using today?
So we use Reg Advisor Pro. We also have the state and the enforcement actions. We also have reg controls. We have control builders, and we have vendor comply.
Great. And can you help us understand what made you choose continuity as your preferred vendor for compliance?
Well, back in 2019, when we looked at the system, regulations were going like crazy, and we really needed a compression rate for the federal regulators for all with recommendations and easy to track. Trying to keep up with regulations being issued on 900 pages or more was just not possible to keep up and do in a timely manner. At that point in 19, when we looked at the system, we were also having someone retire from our department and was not going to be replaced immediately. So we needed a tool to get the job done in an efficient way, get away from the tracking of the manual, and we also needed to get away from manual tracking of reviews, monitoring, and kind of centralize it within continuity, knowing the controls will be updated for us on a regular basis.
Great, I appreciate that. And obviously talking about implementation, I know Sherry kind of touched on this earlier in the reg controls piece of some of the questions that you ask yourself. Where do you start with implementation? And I know you and I work pretty frequently. So if you don't mind sharing with folks how you implemented your program, and I think that will also build into how you rolled it out.
Okay, so the first thing is we started with a Reg Advisor Pro first to help us implement the new rules. That was for us one of the biggest things. And then we went to reg controls to see which ones were available for my department. And then we started going to other departments. And now vendor comply was also being done by someone else about that same time. And then we are now using control builders to build all our controls that we don't have. And probably now as this thing evolves, we'll probably be coming back forward, looking at what reg controls are there now again, and probably reevaluate, because we've now empowered more people in the first line of defense to be doing some of the things that I was doing on the second line of defense. So, and we did have top approval from our executives to top-down approach to this was the way we were going to go, but we didn't push anything on anybody. So our rollout methodology is we started with our department, then we moved to controls, and then we took my spreadsheet of my compliance monitoring and went through it and turned on controls for the department. Then we started with the most friendly department. We started with our loan ops department, who was really excited and looking forward to getting to the program. And then we've moved on, and now we're going to finish up with some of the departments we have left. It's been a long process, but we are getting there. We also we also use the policy and platform section. So next year, instead of creating PDFs for the directors to review to put in the platform for their directors meeting, we will be allowing them access to kind of do that and allow them to be in there. And then this year we went totally bank-wide with service hours and lenders for community development. So eliminating another system and putting everything into continuity.
Yes. Yeah. And Kara, Kara's monitoring and review spreadsheet, when she sent it over, had nearly 80 line items. And so very similar to what Sherry was speaking to on the reg control side is, you know, evaluating what her review processes were, and then mapping those over to the reg controls that met the same workflow. And then we started identifying, you know, hey, we really like this workflow, but there are certain processes or procedures that Kara's team has gone and taken even a deeper dive into. So let's copy those controls using Controls Builder and make it specific to her institution. And loan operation, as Kara mentioned, was the first business unit that we went to after deploying the compliance side. And one of the controls, I think one of the first controls that we built, Kara, was a Reg Z billing error dispute. So that was a control that we didn't have on platform. And thinking of, like you mentioned, that first and second line of defense. So her loan operations manager would go through and on a monthly basis conduct the review of eOscar or whatever it was that was being used to determine if there were billing error disputes. But again, instead of that, let's email now Kara this spreadsheet that Michelle's been filling out, having calendar reminders monthly. Michelle receives the to-do, she completes all of the information, and with Controls Builder, we were able to generate a report from the first the recording piece, and it automatically is then sent to Kara as that second line of defense. So everything's in one area. She can pull the reports. She doesn't even have to go into the report builder. So a lot of great things that we've worked on your side, and appreciate you always sharing that information and continuing to build out that program.
Yes.
So, and I think you touched on this piece of the committee and the board a little bit from the stance of that you have that tops down approach and that executive level buy-in. But do you mind sharing, do you provide this information to a committee or board, or how are you presenting it, and anything else you'd like to share?
So I was taking the, as we started, and you guys, I have to tell you, I am so happy that you guys did the newsletter, because I was manually taking the alerts and the advances and the advisors and the things and manually putting on a spreadsheet. Now, you guys, I send the newsletter to my senior management meetings. I send it to my audit committee meeting on the board, so I don't create it. And then this week, Steph and I created a report off the thing on enforcement actions. So I no longer have to do that manually either. So I am trying to look any way I can to take advantages of the platform and make it more efficient. We're a small operation and a lot to do. So this has definitely been very helpful, especially the newsletter, because it's a great process. And it says anything else to share? I'm always trying to figure out the best way to make things more efficient and trying not to do double work. So I really appreciate the newsletter, because that really helped eliminate a lot of time. So.
Perfect. I appreciate it. Thank you so much, Kara. I'm sure I'll be talking to you again early next week, and we will go ahead and turn it over to our next guest speaker, who is Maria Warner. Maria is with Morton Community Bank. She is the Senior Vice President, Chief Compliance Officer. Morton Community Bank is located in Illinois, and they are approximately 4.8 billion in assets. So Maria, I will kind of go through the same thing with you as that I did with Kara, and if you will just let everyone on the line know what products it is that you use.
Sure. Good morning or afternoon, depending where you are, I guess. We use Reg Advisor Pro, Reg Controls, and Controls Builder.
Perfect. And do you mind sharing why you chose continuity?
Sure. To some degree, quite frankly, we were one of the, I'll use air quotes around originals. It was back in 2013, and continuity was really one of the only choices. We were growing very quickly. As Stephanie mentioned, we're about 4.8 now, headed quickly to almost 6. We have an acquisition in the work, and we were only, I can't remember if we were slightly under or slightly over 1 billion in 2013. So, and that was our strategy, was to grow. Knowing we were going to grow, I had to have something to help me manage. Very similar to what Kara was saying, everything that was coming down the pipeline. Regulations were coming fast and furious. And at that time, I was pretty much a department of one, and there was just no way I could do it without help. So continuity came along. One of our bank management members saw it actually at an ICBA presentation and brought it to me, and off we went from there.
Perfect. Yes, I think we had spoken about this since I was a prior user since 2013. It was one of the only systems that was out there that actually held not just still a spreadsheet type of notification. There were other vendors that would provide a checklist, but it was how do you evolve that into some automation, right?
Right, not nearly as dynamic. Continuity had that dynamic, as you said, actionable kind of format.
Right. Great. And do you mind sharing with everyone how you implemented the program and what your rollout looked like?
I will. We actually kind of did it twice, because I was so excited when we got it, quite frankly. And for those of you that are old timers, there were kind of more pieces of it that we don't even need to talk about now, but there was so much opportunity. I kind of got crazy and drove everybody else crazy. So we threw it out there to everybody. It was like, oh, look, oh, look, oh, look, oh, look. And needless to say, everybody looked at me like I was crazy after a while and turned around and walked the other way. So then we backed up, and very much the way Kara and Sherry have described, took a more measured and a more controlled approach and kind of just started chunking away at it. We did the same thing. We started with the compliance department. What are we doing now versus what can continuity do for us, and kind of marrying those up, and then rolled it out to other departments. Partly it was kind of twofold. One of it was we started providing some of our reporting from the compliance department in kind of continuity's format, so that people started to get familiar with it and realize that, you know, we had this tool and it was a really good tool. But then also, because we have Controls Builder, I was able to kind of keep my ear open for in, you know, whatever meeting I was in, and I would hear people talk about, well, you know, we are looking at Reg CC holds every day. This person, that's what they have to do every morning, is go through and look at Reg CC holds. And that was always the perfect opportunity to say, oh, do you know, continuity control can help you do that. And then I now, so, you know, again, it's been, good heavens, almost 10 years. I now have people call me and say, hey, I've got this going on. Is there anything in continuity that can help me do that? Or can we build something in continuity that can help me do that? So it's almost done a 180 to where I'm no longer the quote unquote salesperson. Now they're coming to me and wanting help. So I feel like we're there. We've made it.
Yes. and that goes back to that culture, right? It's you know, compliance always sees the tool as like, this is beneficial, this is helpful, but then getting that buy-in and shifting that culture in the other departments. Where I know I've spoken to several of my clients that, you know, folks will look at compliance as that, the reviews, that is your role in the organization as compliance officer. And and really it's the mind shift of everyone is responsible for their compliance in their area, and everyone's doing compliance every day, whether or not they realize you know, everyone is responsible. So having, again, I think this tool and deploying it that way, I love hearing that they're now coming to you asking, hey, how can continuity help, or what can we build? So
Yep, me
thank
too.
you for sharing that. 13 years and everyone is now on board.
That's right. It didn't take quite that long. They've been doing
No.
that for a while.
Yes. Perfect. The next set of questions that we'll just go over is, again, any type of reporting. Do you report to some senior levels? What are you using? And then again, Maria, anything you would like to share?
We do, like I said, we kind of started out one of the I hate to say tricks, but that's what comes to mind to get people to get that buy-in early on was some of the PDF reports and different things like that, that what I would include with my compliance report to the board. Not everything, but things that they needed to know about. The other thing that definitely that we use, and I just love, and that goes to both our audit committee and the board, depending on which one it is, are the risk assessments, like the BSA risk assessment and the fair lending risk assessment. I love those, and our board loves those because they're, you know, they're simple. You know, I provide a narrative behind the scenes. I don't think they even look at my narrative. They look at the colors, they look at the charts, they look at the PDF printout from continuity, and they are just so happy that they don't have to read my words, I think. So those things go to the board. I also use information, and I think Kira mentioned this as well. I use information out of the Reg Advisor Pro articles, and then I've even been known, I'll grab slides or little snips from oh my gosh, my mind just went blank. The Wednesday.
The reg
Yes.
facts or reg
Yes,
briefings?
thank you. Both of those. Yes. Good heavens, it's been, yeah, both of those. I take that information, and it's, you know, it's written so well and it's so concise. I don't even have to do anything to it. Like I said, I just snip it out and send it along to help keep them informed on the just what they need to know basis, and they just love it.
Perfect. Yes, and that monthly newsletters is a new feature and a reminder for all clients. We have our support center where those weekly reg facts and the reg briefing, the quarterly reg briefing is saved. The slides are available to you. And so just remember, instead of reinventing the wheel or creating something net new, you know, feel free to download those items into a PowerPoint deck. And, you know, if you want to look at, you know, from the, I believe it was like the fourth quarter, Donna provides a slide that shows the number of issuances and the number of pages. And when you're presenting this information to whether it's your senior team, all the way up through committees and boards, when they understand that there are over 10,000 pages being issued, and you, or maybe just a small team of you, are then responsible for reviewing that information, but instead you had that compressed to, I think we averaged between a 92 and a 94%. I think actually it was a 95% last year compression rate. We're taking, you know, a huge lift off of you needing to go in there and review that information based on the product and compliance categories that you have selected in the Reg Advisor Pro settings area. So, so I'm happy that you're using the tools provided, Maria. And is there anything else you'd like to share before we open it up for some additional Q&A?
The one thing that I thought about while I was thinking about this question was I would encourage everyone, all of the users out there, if you aren't already, every now and then, and I know Stephanie helps me do this, she's really good about it, go through and kind of reevaluate what you have turned off or what you think you weren't going to use. Because I will tell you, even after 10 years, I think every time we do that, Stephanie, you come up with something. It's like, oh, how have I not seen that before? We need that. And besides just adding new things, even old things sometimes I just haven't thought about in the same way, or for some reason didn't notice. So yeah, just keep growing and keep exploring would be my one last bit of advice.
Yes, I appreciate that. And for the folks too that have our reg controls package, there is an overview in Excel document that you can download from that area. And that will show you every single step in the process. So as Sherry had mentioned, you can have a complaint control that's a 1-step or a complaint control that's a 3-step. So you can see every single question, I should say every single workflow. But from that spreadsheet, you can easily go in and select to view only the enabled or disabled controls. And one other, I guess, a tip and trick to use with the newsletter, when those come out, we also notify you of any reg controls that have been updated. So I encourage folks that are one, using reg controls, and those that are using controls builder, sorry, use that as a reminder as well. And when you're meeting with your account manager, to go back and reevaluate. Kara is using I think it's the determined flood insurance coverage, and she has it broken out in a first line of defense that she wants first line of defense reviewing. But then she also, as a second line of defense, wants to conduct her own sample selection. When that reg control was updated, I want to say August timeframe, to address some of the regulatory issuances, that was our reminder to, hey, let's go back in, let's reevaluate the determined flood insurance coverage control that both that you're using copied over, and make sure you're using the current version. So always reach out to your account manager. You know, we love to meet with you as frequently as you'd like. So, you know, pop in, we'll send you our calendar invites. I'm happy to go through what we've talked about today. Again, looking at your monitoring schedule, helping you build it out. And I just want to thank you both, Kara and Maria, for volunteering. I think I volunteered you myself, but thank you for coming and attending, and providing some best practices and how you're utilizing the tool.
Thank you. You're welcome.
Thanks. All right, we are going to open it up still to some Q&A here. I know Kim is going to help facilitate some of this, and we only have a few more minutes. Kim, go ahead.
We are caught up in the Q&A section. One just came in right now. So we do have a question, if we want Stephanie to repeat any to make sure everyone has that, but we do have a question in the queue. The upcoming new view permission settings, will this allow folks to build their own report to pull data from the platform? I know our audits need to be able to pull reports across the smart folders. So is that something, Sherry, are you able to answer that question that just came in through the chat?
No, that'd actually be Sarah, because that's a new feature that I think that she's referring to.
Oh, gotcha. Okay,
Yeah, so
Sarah, are you? Not a problem. Sarah, are you able to help answer that question that just came through the chat?
I absolutely am. Thanks, Kim. So yes, the view only permission user would have access to the report builder tab. They can pull a report on the fly. They'll also have the ability to save a report for either their own future reference or someone else in the institution's future reference.
Perfect.
The answer, yes. To put it very shortly, yes.
Perfect. Thank you. Kim, do you want to go over the couple of other questions that we have, and we can turn it over to the...
Yeah, we'll just go over ones that were answered, just making sure everyone, if it's applicable to you too, that you get that that question answered. So one of them was, do we anticipate other regulators to follow suit when FDIC changes their signage ruling? Justin already answered that, but I'll just, Justin, was there anything you wanted to add to it, to your answer to that question? Would you like me to just read your answer out loud? 'Cause I could do that too.
You could do that, or I don't think that, I think well, hopefully everybody could see the question and answers as well with the responses. I'm not sure if it's just directly to the person who asked or if it's viewable for everybody. But if it's not viewable for everybody, then I basically just said as it's dealing with FDIC signage requirements related to advertising and FDIC insurance, then generally these are going to be applicable to any OCC or FRB institution as well, since they're also a member FDIC when it comes to the deposit insurance. So we may see some issuances from them, but I would also say that it's not necessarily likely because it's probably just going to be dealt with under the FDIC requirements that apply to those institutions as well.
Perfect. Thank you. Another question that Lori had already answered, are there going to be reg controls over appraisal bias or existing reg controls updated for this? And I'll just reiterate that we have questions regarding discrimination within accept, reject a residential real estate appraisal, accept / reject a real estate evaluation, review of real estate appraisal, and review of real estate evaluation. And we also have articles regarding fair lending and appraisal evaluations, which those links, Stephanie, maybe we can just provide those when we provide the deck out as well. Was there anything else you wanted to add to that, Lori, or does that pretty much answer that question?
The only other thing I'd say to that, Kim, is that the regulators are part of that PAVE action plan, and they haven't issued anything specific. If they do issue anything, then of course we go through our typical process of looking at our reg controls, determining whether we need to develop anything new or revise what we already have there.
Perfect. Thank you. Another question that came in was for Justin, just to repeat the sightings for Reg E, and he just repeated that the exemptions as well, and then added a link, and just same with the links, Stephanie, we can just make sure we include them. Anything you wanted to add on that, Justin?
Yes, well, hopefully if somebody, one of our clients who might be interested, if they want to go ahead and pop in a new Q&A that I can drop some links into. I don't know if I'll get back to my FDIC NSF fees discussion or not, but I've compiled a list of about 11 links that basically discuss like everything that I think that's applicable from a regulatory guidance standpoint to NSF fees and overdrafts. So I just thought that might be something useful for our clients. So I can pop that list into the Q&A if anybody just wants to ask a question about it. Feel free to, and I'll drop it in there, and then hopefully we can provide that out to everybody.
Perfect. Yes, and Justin, and for the team, we do have some Q&A stuff, and since we are coming up on the time to go into our next session, we will put together a like a Q&A piece and then attach it to this deck. So we'll get to everyone's questions. And as I stated at the beginning, if you have any regulatory questions, please make sure you go onto the platform and use that help feature. And you'll either go into live mode with Justin, you can send it via email at help@continuity.net. So it looks like some of the other ones are
We're already caught up. Everything else was others. Let me just make sure. Oh, there's two more that just came in if we have time, Steph, or do you want to regroup at the end if there's time?
Let's regroup at the end.
Okay.
And we'll go ahead and move on to our final session here. And for everyone on the line, we will be taking another poll at the end. So if you will just stay on for 30 or so more minutes, and then we will let you have the rest of your day back. So we are going to do a live GRC technology walkthrough. I am going to turn it over to Ryan Fox, our GRC sales manager, and he will introduce Jared. Ryan, I'll turn it to you.
Thank you, Stephanie. And thanks first and foremost for a wonderful deep dive into the continuity platform and the areas that it brings value. Really, we're shifting gears a little bit to talk about Mitratech as a whole and where our vision lies to provide you with best of breed solutions beyond the continuity platform. So my colleague Jared Howe, who is a solutions consultant with Mitratech, and I myself, GRC sales manager, together we've been with the products that we support for over 15 years. We'll kind of dig into some of the areas that we see continuity clients finding the most value within our solution suite. So just to quickly highlight some of the key products that we offer. So obviously you're familiar with continuity, but one of our sister solutions that we'll dig in today is called Align. Align is a very modern platform designed for GRC overall, so it has several different use cases. So today we're really just going to focus on one particular use case with business continuity, but it is a powerful platform designed for overall GRC. Cluster 7 is really interesting, especially in today's current economic environment, because it touches on risk mitigation that's critical to a bank or credit union's overall operations. Just last night, I was reading an article that Bloomberg published highlighting the regulatory discussions that occurred within Silicon Valley Bank, which are typically extremely private, but because the bank has failed, these discussions are now public. And it highlights the features in risk management that were extreme points of failure, areas exactly where C7 is designed to be leveraged.
Yeah, and between the recent high-profile news around that, and then also the OCC handbook in late 2021, sort of expanding model risk management into other tools and calculators, we've already been seeing an increased focus and expect to continue to see an increased focus on the management of risk coming from models and other tools and sort of inbuilt calculators that are used for data analytics and reporting. So, when you're using formalized tools like continuity or other solutions we have in our suite to manage risk, obviously that documentation is done inherently in the tool. You've got an audit history, you've got defensibility. Where cluster 7 comes into play is where you don't have those formalized tools. When you have, most often tools being built in Excel, for example. So models might be in more script-based, formats, but Excel is still extremely prevalent when we're thinking about doing data analytics and reporting and aggregation. So cluster 7 allows you to really manage the full life cycle of these different models and calculators, looking at centralizing an inventory around all of that, documenting and providing automation to support controls around that inventory. And just some of the key points for automation around that are being able to automate change control for things like Excel files, access database files, and even those text and script-based models, so that you can see what's changed, when it's changed, drill down specifically to what those changes were and document why those changes were made, make sure they're reviewed and approved. And then, keep track of that transparent review and approval processes when the regulators come, and put in configurable workflows to make sure that you're staying on top of different tasks. And then also discover things that may not be reported, right? There might be some important calculation that's going into reporting that's maybe a few layers deep that aren't being surfaced to the risk management team, and could have a huge impact on your institution. So helping do all of that to drive stronger risk management compliance, reducing the FTE hours and make it easier to the business to engage the business in the process. Really, Cluster 7 shines.
Thanks, Jared. Yeah, thanks for that added insight as well. We're not digging too much more into Cluster 7 today, but just considering how relevant it is with the news that's going on, it leads the example of Mitratech's vision, right, where we can be a single vendor in multiple areas of risk and compliance. And that's the area that Cluster 7 brings to the table. But we'll table the rest of that conversation, because the products that we're focusing on today, which seem to have the most interest by continuity clients, is policy management and vendor insight, as well as Align for business continuity. So with policy management, we have a solution called Policy Hub, which we'll dig into in more detail, but it's an end-to-end policy creation distribution platform. Vendor Insight is designed for those organizations that have a more mature third-party risk management workflow or more mature regulatory requirements than what might be available in continuity today. We overviewed Vendor Comply. It's a great tool, but if you're looking for something a little bit more robust, that's where Vendor Insight can kind of come into play. Integrum and CMO are more designed for health and safety, audits, incident tracking. We have strong clients in the manufacturing space, but certainly clients in the financial services space as well. Data Store really shines though as a primary solution with financial services because it's designed to handle all of your most critical data, your most sensitive data, and it consolidates all sources of sensitive data like NPPI and so forth into one tool, and then allows you to configure how it's distributed again throughout the organization to specific groups. But as you can see, there's a robust amount of products, and this is just on the GRC side, designed to give you one vendor that you can rely on for multiple areas within the GRC spectrum. Mitratech as a whole also offers HR solutions, legal solutions, other compliance solutions. We just look to be a continuing partner for you. So digging into the ones that seem to drive the most interest with the relevant audience here, again, Vendor Insight for advanced third-party risk management, Policy Hub for advanced policy automation and workflow, and then we'll toss it over to Jared to highlight one use case in Align for business continuity. So I'll go ahead and start with Vendor Insight. If we can go a couple more slides, actually. One more. So this is the overview of the Vendor Insight lifecycle. Really designed to be an end-to-end third-party risk management tool. So if you start and you look at vendor onboarding processes, for example, where does that normally begin? How does that workflow look in your organization? Do you need new vendor request submissions to make it easy for end users across all kinds of departments to say, hey, third-party risk, I'm looking at this new vendor. I need to make you aware before the contract is signed, right? In order to have that type of adoption throughout the workforce, you need to make it easy. So we've built a lot of automation, starting with collecting vendor submissions, storing the vendor contract record. Once a contract is routed through the workflow and signed, the contract is then retained with all of your start dates, end dates, auto renew notice clauses, etc., with customized alerts to notify people before notice periods come due. So you're not renewing contracts that you don't have an intention of retaining. That's how Vendor Insight ties in the contract management piece. But the larger element within Vendor Insight is around risk mitigation and risk monitoring. So the next step is we're really looking at creating a very simplistic inherent risk questionnaire that your business owners could answer if you wanted, or we can have this centralized with the vendor management team. But by distributing it across the workforce to business owners, you now have their involvement in understanding what that relationship looks like in terms of risk. Vendor Insight automatically calculates the risk and the controls, which are your due diligence documents or questionnaires, as part of the policy compliance matrix you see on the screen. That is always configurable by clients. And this is why Vendor Insight becomes so scalable, because as you grow in asset size and you start to hit more mature TPRM workflows or regulatory requirements, you can easily adjust your policy requirements based on the inherent risk of the vendor. Then we go into due diligence. No one enjoys third-party risk management due diligence, right? It's always an added element of work in someone's day-to-day activities. If you have the resources in-house to be able to complete these reviews, we have automated tools to help guide the completion by your staff, right? Therefore, formalizing what a due diligence review looks like, making it very graphical and easy to read if you need to take it to a committee meeting or to a board, etc. But what we find most common is the resources aren't there. There's a lot of resource demand in this space that just simply doesn't exist. So you can rely on us. Even as just a continuity client, you can just add this one element. It's called vendor eval, where you can ask us to collect the vendor due diligence documents on your behalf. We write up an analysis and we call out some critical findings in things like a SOC report, a BCPDR plan, an information security questionnaire, insurance documentation. So you can still meet regulatory requirements. We do the heavy lifting and we call out where you should focus your remediation plans with vendors. The last three steps tie into continuous monitoring, residual risk, and performance monitoring. So the residual risk assessment is a questionnaire that you can configure, but we do give you one out of the box, objectively scored, compares against the controls and the due diligence docs that you've already completed, and then gives you a level of residual risk based on how effective those controls are. The performance assessment, in my opinion, is one of the best parts of the system, as it helps you monitor vendors for their overall performance to your organization, including SLAs. So this piece alone can help you leverage contract negotiations if a vendor has been ill performing or missed SLAs. Leverage that to negotiate better rates or replace the vendor if they're severely misperforming. And then continuous monitoring, we all know that's extremely important. So we have turnkey vendor monitoring and news provided in-house by our research analysts, and they will notify you of any negative news, such as data breaches, lawsuits, acquisitions, negative press even. And then we supplement that with cyber risk monitoring through one of our partners, Black Kite, to give you that cyber risk infrastructure element to see how a vendor's posture is from a cybersecurity perspective. We do have integrations with workflow automation tools, with Black Kite, and others to really grow vendor insight beyond what we've just talked about. But as you can see, it's really designed for more mature programs, and those are looking to scale over time. So now we'll kind of jump into a little bit of the value drivers here. So if you're wondering, this sounds like too much, or this is exactly what I need, this is where vendor insight really shines, and showing the value of a third-party risk management tool of this scale, by making it easy to engage all the stakeholders from the very beginning of the new vendor request process to the vendor evaluations, all the way up to board committee meetings. You are going to have a lot of input by other individuals, and B, a ton of time savings by automating that process. By outsourcing the reviews to us, again, you're able to take a lot of the legwork off of your plate in terms of collecting vendor documents and analyzing the review, but you're still able to understand, what does my risk look like with this vendor? And that's the benefit of that outsourced service. And then continuous monitoring is, it's a regulatory requirement, but it's probably one of the most important elements of the platform, because point in time, yearly, biannually, or every 3-year reviews are not enough for you to be proactive in your risk mitigation. That continuous monitoring can give you real-time updates as to where you might have an incident occurring in the future, and then you can prevent it before it occurs and cost your organization money. That's where vendor insight really shines to bring some value. So now I'm going to move over to Policy Hub. I'm going to talk a little bit faster so I don't rob Jared of time. But as you can see, I'm passionate about third-party risk solutions that we offer. But policy management is just as important. And a lot of organizations really struggle with how they manage and distribute policies, how they're tracking versions, how they develop these internally. So just to highlight real quick how Policy Hub brings value, it's again a SaaS.
So I think I'll pick up until Ryan comes back. Oh, are you back, Ryan?
Oh, sorry, didn't realize I was disrupted.
So you mentioned it was a SaaS tool, and that's where we lost you.
Okay, so I'll pick back up right at the development stage. So when you develop a policy in Policy Hub, you pull from existing templates. So immediately it's easier to start creating a new HR policy or a conflicts of interest policy, things of that nature. But where you really gain some value is when we route the document for review. So you can specify different individuals and groups that need to be engaged in reviewing and updating that policy. All the red lines are tracked within the tool. So you completely eliminate any type of email collaboration or any type of Teams messaging. You're going to have a full audit history of the update to the policy within Policy Hub, with audit history as well, and what we call collaborative editing. So if you're familiar with Google Sheets, right, you can see when someone else is in a Google Doc, exactly where their name is and what they're editing. That type of technology exists in here as well, so we don't have overlapping edits happening at the same time. And then once that policy goes through the review process, right, it might have a couple cycles, might even go up to the board for approval. Then we publish the policy and distribute it to the various employees. And again, this is where I think the system shines, is we can integrate with your Active Directory. So the system will know exactly when new employees are added or when employees move departments. And then we can create buckets and categories. A salesperson or someone on the floor might need access to certain due diligence, sales policies, HR policies, et cetera. But someone involved in loan operations, they're going to need a whole different set of policies, possibly even procedures, to help them with deploying a new loan, for example. Procedures are even typically linked within these policies, and those links remain static, meaning every time you update the procedure, the link updates as well in every other policy that it's referenced. So making it very easy for your staff to find relevant information for their job without you having to maintain anything on the admin side. We use this internally without any training to our staff. So if we're publishing a policy, we'll tell our entire employee group that, yes, expect an email from Policy Hub. It's legitimate. That's their training. And from there, the employees can then review the policy, approve that they've reviewed it. So we confirm that that audit history exists. That's attestation. And then if we have a knowledge assessment, we can even quiz their understanding of the policy. We do that ourselves for very important policies, HR policies, IT policies. We'll make sure that our entire team truly understands the policy itself. And then finally, all important reporting and auditing. If there's ever an incident, maybe even a lawsuit, and you need to provide exactly the version of the policy and when that employee attested, you'll have that data. If you want to hold someone accountable for their updates to a policy, you'll have that data. Very powerful reporting tool. So as you can see, really designed to be that end-to-end policy workflow. One of the most common tools that's leveraged by compliance teams from the continuity system is this tool.
Ryan, I want to just jump in here real quick and read you a comment that was posted by Tammy. Very impressed with the Policy Hub demo that Ryan recently provided to our institution. It's a tad bit misleading. It's really good. It really should be a document hub for an institution. So kind of tying back to what you just said, even though it's Policy Hub, it's really that document hub. So just wanted to share that real quick.
Thanks, Stephanie. Thanks so much, Tammy. Yeah, you bring out a good point. I work with a lot of institutions, and one of their favorite use cases is the fact that they can link those procedures directly within the tool itself and make that very easy for training and distribution by those groups. Referencing procedures within policies is not something that they ever did before, because the amount of FT hours it would take to update all of those procedures and where they were referenced was just too robust. So really an excellent point where this can help. All right, so I've already kind of dug into the overview of Policy Hub. Just to recap on some of the time savings that it provides, or some of the value that it provides, is really that end user ease of use, right? Giving your team a centralized location to access all of this documentation. Very high employee adoption. From an admin perspective, we're simplifying that entire workflow and approval process. We have control of the documents, so no one's adding versions or slipping something in without other people's knowledge by creating that robust workflow. And then, of course, directing the publications of each policy to the relevant users, right? So one important thing to add is you're always updating policies, right? There's always a draft version. The end users will never see that. They'll only see the one that's most recent, the one that's approved and published. And we all know how important reporting is. Very, very defined audit history within the tool. So I think I'm about right on track, Jared. Leave you with about 10 minutes or so. But if we have time for a couple minutes towards the end to leave time for that poll as well, we'd appreciate it.
Absolutely, yeah. So from Align, as mentioned, it's a powerful GRC software with a focus on collaboration, supported by a real intent to have a user interface that is very approachable and gives a great user experience. And then building out on advanced tech to help drive efficiency, leveraging things like artificial intelligence, which we're building in-house, to drive operational efficiency, serverless technology to provide advanced risk quantification capabilities in real time, and spreading that across a whole wide variety of different use cases. We're not going to sit here and take you through every use case and just give you a list of capabilities. We want to focus on today is, I guess, in showing this, that we take a different approach than a lot of solutions in the market from a GRC perspective, and that we don't have a bunch of modules. So when you're looking at these different use cases, you're not buying a module for each one. We rely on configurability. So we take the common tool sets and functions that need to happen across these different use cases and provide you with a configurable toolkit that can execute on these use cases and a variety of others. And what that means is if you're responsible for multiple areas, which I know almost everybody in every bank has to wear multiple hats, you get to use one tool to address multiple hats in one place. And you also give the business users a consistent experience. So they're not getting an assessment for one topic that looks totally different from another. You're not getting overlapping questions where you're asking the same question over and over again through a different tool or a different module and not being able to see that data come together. There are several hot topics that we're seeing in the market across these. So, looking at things like obviously third-party risk management is always going to be and continues to be an increasing hot topic. But looking at things like information and cybersecurity, I think everybody knows that, but it's not going anywhere. It's only getting stronger. Data privacy is getting more and more prevalent. And then actually we've started seeing ESG kind of coming into the forefront. Initially as a, hey, it'd be nice to have while we're getting a GRC software, because we aren't going to have a budget for it, but we want to be able to say we're addressing it, into actually people reaching out as a primary business driver for looking for a solution, something that can help them manage their ESG risk. But today what I want to focus on is something that I think can supplement your continuity suite, and that is business continuity. So rather than try to look at the overlaps and things like that, let can focus on something that is totally unique from your continuity solution and business continuity, and being able to allow you to, as we go on to the next slide, define the different departments, processes, whatever part of the institution is important for you to capture from an operational perspective and drive continuity and resiliency. Be able to identify dependencies and key points of failure across your organization. So if you see on the slide there, that cool looking graph with the little circles and the lines drawn, what you're able to do is capture whatever information you want across any parts of your business, and the solution will automatically, through a graph database, start to draw out those connections for you. So you can start to identify dependencies in a visual way, as well as through it, more of a data focused view, and understand where, if we have something that is a high priority to bring back up a really low RTO, but it depends on another process, another department, another location, application, whatever that might be able to prioritize your recovery processes accordingly, and get to that information quickly and easily. Now, obviously, to get there and get to that RTO point, there's the idea of doing a BIA or a business impact assessment. So fully configurable assessment functionality within the tool, allowing you to define what questions you're asking, what answers users might be selecting from that, how those are going to calculate into various scores, and have that automatically update the different parts of your institution. So whether you're looking at processes, applications, technologies, whatever it might be, being able to ask a consistent set of questions to drive that BIA process, update those ratings, and get to your RTO quickly and easily in a way that has a full audit history behind it. That is fully configurable, but we also offer templates. So you don't have to start from scratch when you're implementing Align. You can pull out of the box content and get up and running quickly. And through the UI, going back to that modern and easy user experience, very easy for anybody who's used any kind of web application. And when I say web application, I mean like a search browser, online shopping, right? Not anything too technical, to go through and make those changes and adjust the solution to what your organization, your institution needs. As you're going through and you're building out your institution and the solution, and you're starting to do those BIAs, and you're starting to maybe roll out business continuity plans, you're able to centralize those plans in the system, go through and do assessments to make sure those plans are robust and complete enough, and then you're going to identify gaps most likely, right? Nobody's program is perfect. There's always room for improvement. So as you're coming across these different gaps, you're able to manage those risks and issues in the system, put in mitigation plans, break out the various tasks that are in there. And going back to that collaboration point, make sure that you can engage whatever users, whatever people in the business need to be involved in that process, and have complete centralization and transparency. Bringing in social media style commenting so you can keep all the conversations centralized around the work items in the system. Being able to keep in documentation along the process so everything is covered. And then, all that centralized in an audit history for reporting. So I think some of the, the key things to take away and thinking about sort of what does Align do differently than, the myriad of other GRC solutions that are out there. Even if we're just thinking about business continuity, on the next slide, I think where Align really shines is the high flexibility. So that fact that any non-technical user who knows what they're trying to do with their program or has an idea and can work with the services or the support team here can quickly tailor Align to their institution. It's very user friendly. It's so engaging that in one of the third-party risk management use cases, we actually had somebody's vendor reach out to us and say they wanted to buy Align to use internally because the assessment functionality was so easy to use that they actually wanted to do more of it, which you never get from a due diligence questionnaire, really. So being able to engage the business when you're doing those BIAs and assessing business continuity plans, and ultimately get easier insights, right? Because you're getting all the data centralized and you have that automated reporting kind of being drawn out of that. So you can get to those prioritizations a lot more quickly. So that's just a quick run through of sort of one use case, but I appreciate the opportunity to speak to you all on Align today.
Great. Thank you so much, Jared. Ryan, we see a question in the chat, and we're actually going to go ahead and toss this over to you, Jared. This was posted by Elizabeth. Can you tell me about the obligations library?
Sure. So I'm assuming it's tossed over to me because we're thinking about obligations pretty broadly. And within Align, you can bring in your obligations in the form of what we call documents. So what you're doing is really bringing in, whatever guidance that is. So it could be, frameworks and standards like ISO or PCI. It could be regulations or legislation like GLBA or, FedRAMP, whatever it might be. And when you bring those into the system, we have the actual text in the solution itself, and we can use artificial intelligence in the form of natural language processing to actually identify across your control inventory, your control library, what control or controls help you comply with every given section of the text, to give you a direct mapping back from the things that you're doing within your institution to drive compliance and that guidance. That means that when you're doing assessments, you can do an assessment once and assess a control once and have that automatically map back to all of the obligations that it is that control helps drive compliance with, and really gain like multi-dimensional insights into compliance across the obligations in one single assessment. Hopefully that addresses the question. In terms of the, yeah, hopefully that addresses the question. It gives you a sense for how we manage obligations in the tool at least.
Yes, thank you so much, Jared. And of course, any questions that you have, please feel free to reach out to your account manager and we will get you to the right folks. And with that being said, we are going to go ahead and post one more poll before we leave. So we'll do that now. Great, so we'll give you all 30 seconds or so. All right, it looks like the poll is over. Want to thank everyone once again for joining us today. I know this is a huge time commitment, so we appreciate you engaging with us. We will make the slides and the recording available, and we'll notify you on the platform. And of course, you have any questions, please reach out to your account manager. And I hope everyone enjoys the rest of your day. Thank you.